Chicago falling 3.8% after bank cuts annual net interest income forecast. Also, JP Morgan shares rising about 0.8% after Q2 results.
Check 1, 2, mic check. Check 1, 2. Is that on or no? Is that open? Hey, good morning out there. How y'all doing? Give me one quick second here. Switch over right here. Just a note that we're opening on SPX 6300 this morning. A large amount of supply here. We could pin here for a little while. See, we've got a huge gamma bar at 6300. One quick second here. I got a bunch of stuff. I'm trying to reset everything. Come on. Fuck. Thank you. Sorry about that. I'm trying to open some positions here. Just a few seconds here.
Seeing the dollar yen rising about 0.5% to about 148.47. And stocks Europe 600 index erases gains, trading flat.
Coming into the half-hour trigger right now in SPY. Well, quick second here, guys. I got something I got to do. SPX coming back down to its first inflection point. What is with this reset stuff? There we go. Got a nice bullish hammer candle on SPX on the weekly. SPY, not SPX, excuse me.
Seeing shares of US chipmakers rising after Nvidia to resume sale of AI chips to China. AMD up 7.7%, Supermicro Computer up 4.5%, Broadcom up 1%, Intel up 1.5%, Micron Technology up 1.8%, Qualcomm up 1.2%, TSM up 2.7%, and Marvel up 1.4%. Seeing the Dow turning negative, last down about 0.3%.
Yeah, Dell last night was kind of weird to look at. It was trying to break out yesterday, but it's in this like it's looking pretty fucking bearish. We're talking on the Discord this morning. S style looks great, but it looks like it wants to break out. It's rejecting right now. Excuse me. Or there. See what's going on here. See if buyers step in here. We're pretty close. Switch this over to a 1 minute here for you. Excuse me.
S&P 500 banks index down 1.2%.
What do I got to do here? Sorry about that. Apologize, guys. Hang tight here. Sitting on R1 right now. Coming into a 4-hour bar and a 30-minute trigger. Mm. 11 minutes left until 10 a.m. See if buyers step in here in just a few moments. That doesn't. like that? I think I need to change everything, the location of everything. Move that over there. That over there.
Trump on Truth Social says, great deal for everybody just made with Indonesia. I dealt directly with a highly respected president. Details to follow. So again, great deal for everybody just made with Indonesia. Again, that was on his comment on Truth Social there.
How does that not look like? I don't know. Maybe I'm just like screwed up with all. Like I moved some of my tabs this morning, and everything looks kind of weird to me. Maybe it's just the way that I'm watching everything. Watch us. So SPX 6275 should be support, but it could be slightly higher. Right where we are right now. Dixie breaking out right now, trading 98.348. VIX 9-day not showing anything right now. Still have some gaps to close down below at 1042. We're waiting for 10 a.m. Could be one more slice lower here. Just be patient here. Sonny, don't do anything yet. It's kind of right. It looks pretty good.
The euro falls to $1.16, 1.1638 against the US dollar, the lowest since June 2025.
Halfback is to 625.50, 625.34.
The lowest since June 2025.
Fairly close, somewhere in here. I'm having like serious problems with financial juice too. Having problems for like 2 days.
US dollar rising to about 140.
What is going on?
Against
I'm having like still having issues here. Should turn around here soon and try to trade 6:30 or so. Fairly close. See if we can catch this 10 a.m. turn higher. And they're like trying to offer me an out right here before we turn up. The target below is 625.50, 625.34. SPX also coming down right now into 6275. A lot of demand here. Just give me like one more fucking. There you go. There, guys. I got a bunch of. I got fucking like. I got a lot going on right now. We got like a bunch of fucking trades on. That should have totally fucking closed right there. Sweet Jesus. I was in some puts yesterday for Thursday. And on the bell this morning I opened up like I doubled down on the puts that I had for Thursday, and then I added a bunch of puts for I don't even know what the fuck I had. I loaded a fuck ton more puts on the opening bell to like make all that money because I was kind of upside down this morning, and I'm fucking green. Think. Hold on a second here. I'm actually fucking green, so I'm happy right now. But I'm closing out a bunch of puts here too. Like with 0 dates, one or not zero, like with two dates and 3 dates and stuff like that. And meanwhile, I'm trying to put a hedge on up here. I'm putting on a 630. 590 for November. Hold on here. My account's fucking like I'm trying to like bounce through my account to close a bunch of shit out. And I also got like I got some Dixie stuff on that expires on the 18th. I got a lot going on in my account right now. No. November 21st. Hold on a second here, guys. Spoo's now coming down. If you want to check with me down the bottom right-hand side here, just look at SPX with me. There's SPX right here. Can you see this? Let me move this over. Wrong side there. So you can see it here. This is 6275 right here. There's a little bit of gap left down below here. You can see just some sweeps coming in right now. Don't get too crazy with Doom and all that kind of stuff. You're looking at SPY right now. I'm just going to come in here and try to take all of your stops down here. If you're any kind of like 0 date puts off the bell or anything Doomish here, watch for a sweep coming up here in just a moment. No long yet. So what we're going to do today is this. We're going to look at the stock market today. I was thinking about this yesterday. We're going to look at the stock markets for I was asked yesterday or the day before I was asked, how do you know if there's a turnaround or a place to buy the dip? Like, where do you know? How do you know where to buy the dip? And or sell the rip or anything like that. How do you proof something? So in briefs, I started adding in a box that said, I don't like to trade the dotted white line in direction unless there's proof on the other side. So like if we've got a dotted yellow line, we have the solid yellow line where we're going, and then where the accumulation is on the white dotted line. You really don't know where that turn comes in. So I was asked, how do you know if there is a turn? And so what we're going to start looking at here, we're going to spend some time just looking at what we think is a bottom, right? So like, oh, this might be a bottom right here, right? And we're going to wait and see if this consolidates and turns up, or if it breaks lower and then begins to turn up. And we're going to start to look for just turnarounds. No tools, no nothing. No indicators, no nothing. Just want to see if there's any kind of turnaround. So we're going to move this one down here, a little bit lower, right here. We're going to move this one down right here and see if we can, just with candlesticks, figure out if there's a turn coming up or not. And what you want to be doing is here, if you don't know, is you really want to be looking for the second red candle. So you got this red candle right here. You're going to be looking for this second red candle. Right about there. And you want to be looking for this first green candle right here. And any like what you think is a bottom. If you think, hey, this is bottom right here, and you get a green like wick, get another wick right here. Wherever that next roll down is, just gonna be watching this for a turn higher. So I'm gonna be looking for this last little bit right here. You can see these last two little candles right here. And to see if we get a turnaround, you want to be looking for a breach higher of that prior high. And in this case, I'd like this one too. And I want to see this kind of hold right here. This begins to hold, we'll start to take a trade higher. If not, there's no bottom to be bought. So we're going to simplify this real easy here. Just going to watch where we are. You want to be, if you're not using anything at all, you want to be looking at, on cash market, SPY 5s and 0s. For supply and demand. You also want to be looking for, where does price stop? Does it stop at $2.5? Does it stop at 0? Does it stop at 7.50? So just using basic numbers like 2.5, like 0, 2.50, 5, 7.25. I don't know if I said 8.25, but 7.25, and then the 0 on the top end. And so let's look and see what we can divine just from numbers right now. That's it. In cash market on SPY. We just traded down to 625.40. The low was 625.26. So on a 5, you're going to expect what? Demand, right? Right where we are. Right in the zone that we're at. This is 10 a.m. So you got 10 a.m., between like 10 and 11:30 a.m., you're going to expect directionally, if we're on a high or a low, sellers or buyers to come in. Right now, opening on a high, coming down into the morning trade at 10 a.m., you're going to expect the sell on that bell for buyers to step in at 10 a.m. They might fail, but we're going to watch for these buyers to step in and see if we can trade higher at 10 a.m. If we start to make some new highs, nice little back test, what we'll do is we'll try to pick this up until what time? Until roughly 12 o'clock, right? Right around 12 o'clock, we should get new flows that come into the market. Up or down, we don't know. If they come in and start to sell this on time frames, you've got 10 a.m. Hold on here. 10:30 and 11 a.m. I'm just going to watch this time frame in here and see what happens. Just watch price action, So I mean, this works on the top side too. So if you're trying to sell the market, you can start to box this stuff out and look for the break below and the new low, right? So you've got a box here, right? A consolidation box. Or we think is consolidation, but we don't know if it's consolidation or distribution, right? Slam down here. We could sit in here for all day long. Sit here till 4 p.m. What we're looking for is either some kind of a new high, right, to back test and begin to break out and take that trade higher, or some kind of a breakdown, right? We don't know any other information. We just got time, price, that's it. We're going to break down here, make some new lows. We'll take some more puts to the downside, make it nice and easy. Oh my God. I'm looking at these fucking puts that I put on them. Fucking like I have my returns on just these put trade. It's like this down and then up right there. It's like right over. Skin, oh my teeth. I'm going to raise this one up now. So here's would be your stops right here, just so you can see it. I'm going to raise this up to this next red bar right here. Remember this prior high right here? I told you I'd like to see us get above that one right there. About there. What I'm looking for here is, I want to see what I'm looking for here from the bottom. Right here. See something like that. That right there. Dip buyers stepping in on SPX 6275. There's intraday right here, just so you can see this. This is the equal legs right here. It's the target. This is the halfback trade right here. Dixie going moon right now, by the way. I think this should stay on for up this. That's the longest I can do. Oh, there we go. 2 minutes. On here. Cool. I got kicked out of my revolver VIX 9-day. And just to note here that we are sitting on the half-hour trigger. If there was a dip to be bought, this is probably it. Somewhere in this vicinity nearby. There's a little bit of gap lower at 624.13. Remember, this is stops right here. So this green box is stops right here. So I want to explain what this means here. Maybe this can visualize it enough for you. So let's say you've got stops right here, right? So green box is stops. There's a market maker, like a dealer that knows your stops is right here. They know that. So as you raise your stops higher and higher, right? Start here, move up to here. They know your stops are here. So what they'll do is, there's two ways to look at this too. The dealer will come in and sweep your stops, pull back up, and then off and run. They know that you raise your stops this whole way. So if you break lower, this is what I mean by, if you think this is bottom here, right? And let's say this is the low right here, the actual low, right? It's right here. And you're like trying to get long. You're like, hey, there's a bounce back here. We're going to try to get long to the upside. And you ever encounter any kind of like a sweep lower, like some kind of, like you get the new high, but then they sweep down here, let's say, and they just dip down for a minute. This should trigger you for your stops, but you shouldn't have stops on there. There's occasions when you should have upside or downside stops on a trade, but those reasons don't apply most of the time. Most of the time, what happens is they'll hit your stop number. Let's say it's right here, and then off and running. Now, let's say they come through and they slam into your stops, right? In your brain, not actual physical stops. And they blast down here, make a new low. About 85% of the time, that much, like 85% of the time, what you'll do is you'll get, so you're blasting through, you have the low, you have the new low, and even if you're going to make your way lower, what they'll do is they'll blow through your stops bigly, right, as they say, bigly, and then they'll retreat back up again to confirm the failure of the buyer going higher. And what it shows is no strength, either tired or no strength. Normally, the inflection point is lower, right? So what you'll do is you'll get a chance to actually get out. Oh, sorry. Hold on here. So if your stops are right here and they break you down like deep, right? You're like, oh, my stops are triggered. I got blown up. You'll get it, believe it or not, you'll get a chance to exit in an orderly fashion here. And the damage will be only slight. 2, 3 pennies, 4 pennies, something like that. Whatever the fuck it is, depending on the trade that you're in. Now, let's say they blast through, take your stops down here, and you don't have actual stops on, right? So you get out right here, you exit in an orderly fashion, and it actually recovers. It comes back down here. You could reinstigate a call again, or a long and futures, whatever it is you're trading, once again in better positioning. Right here, you lick your wounds on this back side over here. Why do I say that? I say that because let me show you this. Okay, right there. Nope, sorry about that. So you come up here, right? They blast you down, and you get out in an orderly fashion here, right? If they start to send you down, you're gonna get your ass handed to you, right? So like you've been patient here, you've been triggered in your stops right here. You exit in an orderly fashion, and you've now saved yourself from getting annihilated. And even though you might get like beaten up for like 3 pennies, 2 pennies, something like that, you've saved yourself for a better trade, right? You're going to plan out a trade, you make a mistake, you get the wrong trade, you still are afforded an orderly exit. Now, let's say you're like, well, Cap, this one time, this one time, this one hindsight trading moment, it recovered up here. That's okay. You take the licking on the 3 pennies or whatever it is, that small hit, and you get back in again. And if you're off and running right here, those pennies are gone. They're like gone. And not only that, if you were to reverse this downside, those losses are fucking brutal, right? So if you take like they say, 10 small cuts, and then you hit the banger, you should be fine. Should be no problems here. So watch and see how this works out. See if they try to do a liquidation break or anything like that. You'll hear this call a liquidation break. Dealers know you're down here. They'll try to sweep down, take your things, and then we're out of here. I don't see any force in selling here. I see accumulation. If you look on SPX on a 1-hour chart down here, they're eating up this hourly candle like it's nobody's business. Let's buy everything. You can see it right here. We got to talk about bank earnings too. I read earlier last week. I read a piece saying that everyone was bullish on bank earnings. And the thing that shocked me about it was twofold. I'm bullish on bank earnings, but what I never like about bank earnings is they often sell early, and then they'll sell the day of their ER, and they super ramp thereafter. And so today we had, let's take a look at some of these. Oh, we're in extreme greed right now. We just entered extreme greed. Not quite. Maybe end of day. But I want to show you this. I want to show you this earnings calendar here. This morning we had JPM, Citi, Wells Fargo, BlackRock, State Street, BNY to start us off on earnings. And the only thing that I scratched my head about was that historically I never see banks. Sometimes you'll see a bank ramp after the bell. Like they'll sell the bell or they'll sell the ER in the morning and then they'll ramp 9:30 and it'll start cranking. But normally it's like a day or two later. You'll see banks come from behind and have their second trade. They have like their first trade that they sell out of before they have their actual ER. They ramp it back up, right? They sell at like 6 a.m. They sell. And they come back in and they actually ramp that ticker thereafter. Now, you see it right here? So here's your stops right here. This is a market maker taking your stops. We don't have the new low down here in the prior. Let's watch this price action. See, this would be where you'd be traditionally triggered, right? Like right here. You're out, right? Let's watch the price action that takes place in here. Like, oh, goddamn, man, I'm like long down here. You know, get my stops tripped up. You're actually long from right here. Let me draw this in. Right there, right on that candle, right there. Here's your stops. We want to see if you were afforded the chance to get out once your stops were triggered. It's kind of why in most of these scenarios, I don't like the, not all of them. Like if you're in like an event or something, you can get annihilated, right? We blast down here, start staircasing down, take all your money crying, going home. Same thing on the upside. Like a normal day like today, you'll see this same price action all day, every day. You see this like 10, 20, maybe like 10 times a day. So we're going to look at some of these companies this morning. We're going to first look at JPM. This is the darling trade too, by the way. And not to mention when I watch these stocks, right? Oh, hold on here. What am I doing? When I watch these stocks during their earnings, anyone that trades earnings knows that while the while the mosquitoes, I guess, are heading towards the next shiny rock. There's JPM. You want to see it right here? I had JPM yesterday trading up here and then down to turn around. Let's put this on an hourly here. Let's get out here and take a peek. So here's JPM. I showed you this yesterday. And I just want to show you this this move here. So here's JPM, right? They traded up into this morning and then sold And what I'm fascinated by is whenever I come into an earnings, like you'll see news articles that will straight trash a ticker. You know, it was horrible ER. It was this reason and that reason because they missed. And then you'll come in like 2-3 days later, day or two later, and they'll swoop in and buy this up. And remember that you need financials. I want you to remember this too, because we're in this earnings season. You need financials to carry the markets forward over the next few weeks. So forget like Vixpiration, forget OPEX, forget end of the month. Or you don't forget them, think about them, but think about the fact that financials, no matter if we get an unclench on or on Vixpiration on OPEX or even into end of the month for July, and trend stays viable, you need financials to follow suit. So while everybody is focusing elsewhere, you want to be keeping an eye on financials. One of them being JPM, and they've had a kind of a disappointing return this year. So if you're watching this right here, and I want to show you under more relief here. You look here, you've got this first move higher, right? You got this first impulse move higher here, right? You could count that or even count that, I guess, if you wanted to. Either this one doesn't really matter. Well, I guess it could matter. A lot of people probably counted this one and not that one, and they think there's another leg in here. But I don't. I think this is 1, 2, 3, 4. And but the key point here is this level right here. I want you to focus on this right here and this 4 right here. And this is kind of like Poop Island, right? So you see like all the doom talk and like banks didn't perform and that kind of stuff. What you're going to be watching for is when the volatility leaves. Let me show you that right there. When volatility leaves, let's say we burn off some volatility in OPEX or Vixpiration or anything like that, and see this August down here, and this July 1st right here, you could possibly see this begin to bottom out and sweep higher on a back test if it's daily trigger right here. And this would be an early indicator if the market will hold up longer into August or anything like that, if anyone thinks that we're gonna. If you're a bull and you think, hey, we're going to trade 640, 650, anything like that, you want to be watching stocks like this JPM for continuation higher, even though they didn't print on their morning of their ER. And we're going to watch this one closely because it's not just JPM. There's JPM, there's Citi, there's Wells Fargo, BlackRock, State Street, Bank of New York. And then we have some more banks, like other kinds of banks and smaller regional banks reporting that later this week, but you want to keep an eye on these. There's also an ETF with these stocks in it. There's a bank ETF that you can watch as well and see if this will show continuation and risk-on behavior into early August. So watch this closely here. Go back up here to the top screen. Dude, like options are fucking expensive as fuck right now. Hopefully I can get it. Hopefully I can get a nice example here for you guys in just a moment. You can see where They came through, took stops here, took stops right here, and still recovered. Like being given a chance here to get out. Excuse me. No sign of buyers at 10 a.m. No sign of buyers at 10:30. Well, I shouldn't say that. Buyers are buying here for sure. Also note that 6220 and 6200. You want to see this right here? These two green boxes right here. This is top of the world. It might have even changed this morning. Let's take a look here. Boy, JPM is bullish as fuck, man. JPM 10 a.m. coming out and saying market resilience continues, and investors seem likely to look through any negative trade war updates until August 1st, where the consensus view is that Trump either rolls that expiration date or reduces aggregate tariff levels back to the 10% experienced during the first 90-day delay. That said, some feel that the performance of the markets emboldens Trump to take a harder line, such that another market swoon may be necessary to reduce average tariff levels, though few expect another Liberation Day-like move where SPX fell more than 10% in 2 sessions and the 10-year yield increased by more than 40 BPS. The NVIDIA news seems like a positive step, but whether we see any additional de-escalation in the very near term remains to be seen. I don't like there's a narrative out there. It's really bizarre. I was reading this. I fought tooth and nail to say to people that tariffs are not taxes. And regardless of what the Democratic mouthpiece tells you, and I got screamed at for like months over that. I got screamed at that a year or two ago. And then I got screamed for like 6 straight months. And we're not seeing that, right? That tariffs are taxation. But there is a flip side to that. If you don't see, if like this is the people screaming constantly, there is a downside negative to that. If the consumer doesn't bear, like consumers will bear some of that I'm being a little black and white here. If the consumer is well off, they will bear some tariffs as taxation, and corporations will attempt to pass those along to you every time they get. Like econ 101 is that a company will forget tariffs. A company will always do market price what the market can bear. They'll always do that. And then not only that, they'll actually cut what they offer you if the market doesn't bear an extra price. If I can't raise the price of a hamburger to $5, I'm going to give you a smaller hamburger or less ingredients in that hamburger, whatever I need to do to survive. So whatever the market can bear is what the price of a good or service is, theoretically. Now there comes a time, and we already know that people hate tariffs. They hate them. They hate tariffs. They don't just hate tariffs. They hate inflation. So if we're not seeing that tariff inflation, there is a downside to that. There comes a point where corporations, producers will absorb some of it. Sometimes let's say, if like workers that are cheaper somewhere else, they'll just pay them less. Like if you got a slave wage labor in another country, let's say they make $1 an hour. A producer can drop their price to 50 cents per hour. You might have a government step in and pay
North American sales executive
some of that.
Tesla as sales decline.
Pay some of that 50 cents that was cut from their pay. Believe it or not, China does that. So you don't know who is going to absorb these costs. But there comes a point where corporations will bear the brunt of that cost, and that can be reflected in their earnings. Now, this isn't all companies. What you might not know is that most Fortune 500 companies do not sell today physical products, or they sell products that are not beholden to tariffs from other countries. Does that make any sense to you? If it doesn't, let me explain it further to you. You have companies like Apple that will do anything that they possibly can to avert import taxes. They'll do anything they possibly can to avert corporate taxes. They'll place their company in, say, Ireland, right? They'll ship goods through ports where they can, believe it or not, avert tariffs. They'll put phones on a plane. They'll stack a plane deep with phones to carry them through. Whatever they need to do until the next choke point that they can move and avoid those taxes. So most of your Fortune 500 companies today are either service-based or they are very successful at avoiding taxes. Now, that's not all Fortune 500 companies. It's not all companies within the stock market. It's why you see like small caps or mid caps kind of lag here and there. Sometimes you'll see the Dow lag. That's because some of these companies rely heavily upon normal channels to the upside. Coming down to close the gap now on SPY. Trading 24.75. The gap is down. There's another gap at 623.84, but this gap pretty much ends at 624.14. A little bit higher than this. Oh, hold on here. Sorry about that. Like cycling through a bunch of other crap. I'm gonna raise this one just a bit. About there. And JPM had a good earnings. Wells Fargo Company had a good earnings. NVIDIA last night had a great update on chips for China. And that had started earlier in the week, and then it came out more yesterday and mattered yesterday. Dip buyers still trying to buy long here. Gap's almost closed. And just a note, we just traded hourly trigger on SPOOs, on SPY. SPX still a little bit lower. See it right here.
Mexico's President Sheinbaum says that Mexico will announce other measures if an agreement with the US regarding new tariffs is not reached by August 1st. It's just a reiteration of what she has said yesterday here. France's PM Beirut says that we will call on taxpayers who can make a bigger effort to do so by limiting certain tax breaks.
SPOO's trying to turn around again. Dixie's still looking bullish. VIX 9-day still looking bullish. HYG trying to turn around now. Gap is still a little bit lower down here.
Beirut says additional tax measures will target the highest earners with anti-optimization of measures. So again, additional tax measures will target the highest earners with anti-optimization measures.
SPX now coming into its half-hour trigger.
S&P 500 turns negative, last down about 0.06%.
And gap's closing right now. That's 623.85 is the gap. Right there's the gap. SPX coming into hourly trigger right now. Also the 11 a.m. hour. HIG reversing to the downside. VIX 9-day climbing. Dixie's still mooning.
Department of Justice ends polymarket probe in win for crypto betting under Trump. So again, Department of Justice ends a polymarket probe in win for crypto betting under Trump.
One minute trigger crossing hourly trigger right now.
Also, the US Treasuries to auction $90 billion in 4-week bills. So the US sell $90 billion in 4-week bills to settle on July 17th. On July 17th to settle July 22nd.
It's 12. So you can see all this here. Let's show on the screen, yeah. Same place. Nothing's changed right here. You could lower it a little bit. Or about there. The cell's lower now. It's here. Stops were here, right? What is that? Treasury yields spike after Treasury Secretary Bessent announces at the start of a formal selection process for new Fed chair. 10-year is up 3.6 BPS, 2-year up 4.4 BPS.
Francis Beirut says that we plans to tax on small parcels amid unfair competition. So plans tax on small parcels amid unfair competition.
Hourly candle being bought again at 11 a.m.
Meta faces new EU tech antitrust clash after €200 million fine. So EU warns that Meta still hasn't fixed pay or consent ad model.
And dip buyers stepping in again. They just fucking won't quit. 11:10. 50 minutes. Find out if more buyers step in at the next hour.
So just a heads up for users, Energy Secretary Wright is due to speak. And he's currently speaking live now. It's currently Energy Secretary Wright currently speaking on Bloomberg TV. We'll pop out the video for you to watch. Citi CEO says that I expect to see goods prices start ticking up over the summer as tariffs take effect.
Note here that we've got a bunch of Fed speak. We got 12:45 Barr speaking, 2:45 Collins speaking, and then 7:45 Logan speaking.
We have posted out the video on the feed for you to watch where Energy Secretary Wright is currently speaking on Bloomberg TV. And also a reminder too, at 11:45 a.m. Eastern Time, White House crypto czar Sachs is also to speak on Bloomberg TV as well.
Christopher Wright, I'm Tyler Kendall. I want to show you some of these statistics that our analysts at Bloomberg pulled that the U.S.
So this is Energy Secretary Wright.
13% since late February. It's in the midst of its longest.
Be very careful of a downside move here. We're getting an energy pump.
Some incentives in the reconciliation package, but what further incentives is the administration considering to help get forward these oil rigs to continue drilling?
Mostly it's get out of the way. You know, we had the Biden administration had 4 years, all of government approach to try to, as they said, end fossil fuels. Now, that didn't work very well. We went from 82% of American energy coming from fossil fuels before Biden took office to 82%, exactly the same when he left office. Those are just simply the energy sources that power our country and our world today. But it's get out of the way of the marketplace. Right now, U.S. production is growing so fast, as has other places in the world, that prices are maybe at the low end.
I'm going to speed this up a little bit to catch up to real time.
So you see a pullback in activity. You're going to see, with these new investments in economic growth in the United States, we're going to see growth in demand for oil, and of course that'll probably bump prices back up a little bit, keep drillers active.
Well, you mentioned there perhaps a lower price environment.
Note that CL is coming into seasonality.
Getting energy to help power AI.
Gas is starting to pump too. Or prices are starting to pump, I should say.
Copper tariffs set to go into effect on August 1st going to have when we're talking about
Sachs says that we shouldn't be selling our best chips to China, says Trump's AI and crypto czar David Sachs, speaking on CNBC before his interview on Bloomberg TV, saying we shouldn't be selling our best chips to China.
Mines that have been trying to get going for years. We want to get copper production growing rapidly in this country. Copper, like steel, is just essential to everything that happens.
Trump says U.S. has a deal with Indonesia, but shares no details.
To get some sort of tariff carve-out moving forward?
I believe the president plans no special carve-outs. He wants
Sachs
to
says it's important we take
reindustrialize
market
the United
share from
States of
Huawei
America.
in China.
There's a lot of tools to do that. Make it easy to invest in the United States, make it attractive to invest in the United States, and tariffs are an additional element of that toolbox.
I'm sure you're talking to industry, though. Is
Yes.
a carve-out on the table? Are there any negotiations underway for, say, the oil industry to get a carve-out when it comes to the equipment that they use in the field, like copper or steel, for example?
No discussions right now. We are hearing from the industry, and of course this is true. If you incrementally raise the cost of projects, that hurts the economics of them. We want to do everything we possibly can to maximize investments in the United States so jobs and opportunity come here to our country.
Lastly, I just want to ask you a geopolitical question, because we did hear from President Trump yesterday threatening 100% so-called secondary tariff on countries that import Russian energy supplies. If that were to go into effect, what would that do to prices in the global energy market?
Something like that would likely drive oil prices up. I think President Trump...
This is kind of comical. You'd think this lady would ask about buying Russian oil from India.
Will have an impact on
or Iranian oil.
Just a brutal war in
This guy's like, oil prices higher.
President Trump's goal is prosperity at home and peace abroad. And the old formulas weren't working.
This is a play ball kind of an interview here.
Trump has very different tools, very different negotiating skills, and very different level of boldness. I think we're going to see tremendous...
It's a pump piece.
...abroad and prosperity at home.
All right, we have to leave it there. U.S. Energy Secretary Christopher Wright, thank you so much for your time. This has been a conversation.
It's where you plead your case for your... It's where rich people get to go plead their cases for...
Kendall.
For welfare.
Says holding back U.S. chip exports builds Huawei demand.
Of Energy in Pittsburgh, Pennsylvania, talking about some of the pro-energy policies coming from the Trump administration so far, and more.
Okay, that concludes comments from Energy Secretary Wright on Bloomberg TV.
I don't see Crypto Czar Sachs live stream anywhere. He does say it's important that we take market share from Huawei and China. Holding back U.S. chip exports builds Hawaii demand. We shouldn't be selling our best chips to China, he says. SPY trying to hang on to a bottom here. We're going to find out here soon enough. We'll get into this 12 o'clock hour here. We'll figure out if we're going to make another leg lower or if we're going to turn around to the upside. How far trigger remains so far above the hourly trigger. Hourly trigger still hanging out. Hourly trigger and SPX being bought as well. Note that we do have expiration tomorrow. And then on Friday, we have OpEx. We also run into a fairly busy week next week and into the last week of July. Note that this month we have, I think, 4 weeks in a month, but we have a tail end week of July 1st, 2nd, 3rd, 4th. And then we've got the tail end week of the 28th, 29th, 30th, and 31st. Dates can matter on a. Yeah, that's ugly. Hold on a second here. You know, it's weird, that chart, that pair trade there looks super fucking bullish, doesn't it? It looks more bullish than it looks, unless that's bullish thereafter. This one's now gone. This one got beat right here. That one got beat with this one, so now we're just waiting for that one to get beat. Don't need to worry about that anymore. That's gone. Watch out for a squeeze here to the upside. To trade 62 or 625.50. Watch this last tick right here. Hourly candle being bought on SPX second time. Pay close attention to SPX 6277. Dixie's still up. VIX 9-day with a small rollover. JPM just ruminating. HYG just parked. Look at the 30-year and the 10-year too. What am I doing here? Don't fuck around with my fucking trade. $10 years still up. Dude, what is going on? Maybe it's just changes. There's got to be like changes or something that I'm like, I've got like 30-year yield looks like it matters more than the 10-year. Let me take a look at this. So the 10-year spiked. No, maybe the 30-year. Nope, 30-year was just absorbing all of that debt. So 30-year is doing just fine. 30-year is still low here. 4.9 or 905. 10-year look is still cranking right now. Good news is that the 10 and 30s are not moving together right now. Watch out for a rejection on 62550. It's like right here. I'm wanting to see something like this. I'd like to see that right there, to be honest. So 26. See if this will start turning around or not. You can see all that there. Ten-year now trading 4.476. HYG just bottoming right now. $6,275 trying to be regained right now for the Bulls. I'm getting fairly close here. Maybe one more green bar. Maybe two. Look for a pullback down to at least 2468 or something. Down here. See if buyers will step again at 12 o'clock. See if we can catch a dip in here. Still no high on the prior hour candle. 11:30. See if they can pop this up right now. Watch this pretty close. You want to be watching this price action in here between now and 12. Give me 5 minutes here. I'm going to go to the bathroom really quick.
So heads up White House advisor David Sachs now currently speaking on Bloomberg TV, where the video is on the feed for you to watch. So Sachs currently addressing easing of curbs on NVIDIA H20 sales to China. And Sachs sees merits to Jensen Huang's case for easing curbs. Sachs cites importance of building AI on American tech stack.
Where is that down there? That is Tuesday at 1600. I got there Tuesday at 1600. That's Tuesday close.
Sachs says Huawei has advanced very rapidly in AI chips. Adding Huawei chips are still not as advanced as NVIDIA's. Sachs saying the US should do everything possible to boost US exports.
I'm back, guys. Hold on. I like changed everything around in my office once again. I got my eyes are not ready to go from place to place. We're gonna find out here.
Sachs has the security concerns surrounding chips can be addressed.
So just a note here too, if you're watching the show right now, that we're gonna find out here soon. If we can't break out here between 12 and 1:30 here, if there's no breakout to the upside, we're likely going to move lower to, I want to say 618. But I don't think we're there yet. So you want to see what happens up here at this 12 o'clock. You want to see if these are buyers or sellers. That's 620, 6225 on SPX, but I would like to see like the Monday. Where's Monday? Like Monday would be 6216 on SPX. I think that's 618 or something on SPY. We're gonna find out real soon up here. SPY coming into 1, 2, 3, 4 trigger cluster. And just so you can see here, we need to get above 6250. It's a little bit lower here. Get above like right about there. Turn to the scene of the crime here. We're going to find out if we roll or not. You can see that whole same scene of the crime right here. We'll find out if we break above that or if these sellers step back in one more time. This is where they are, like right here. Or slightly lower, probably like right here in this yellow line.
Says AI data centers in the US will need more access to power. Adding energy is a major area for investment to support AI.
More calls for AI data centers and the need for more power. Sachs goes on. So he's all over the place with some of the stuff that he's saying here. SPY trying to break out now. It's above the hourly trigger, trying to break above the half-hour trigger. See what it looks like on a 30-minute basis. $30 minutes neutral, hourly is bullish. Well, there we go. Nice little pamp right there. SPY coming into a 5-minute trigger. See here if it breaks out, squeezes, or rolls over. Still looking for a back test even if we squeeze here. So if you're watching this right now, if we do get the, this was the pump right here. So you can see that. I'm going to find out if we want to see if we like squeeze up and then back test successfully. If we get a nice back test here, bulls in the clear. If not, we're going to head lower to 218.
US Treasury 10-year yields hit new 4-week high of 4.487%, last up 4.8 base points.
625.50 is what I'm looking for. It's trading 34 right now. Now coming into 6275 on SPX. Dude, what is going on with my fucking... Squeeze it. This over here. I gotta make 2 of these. I'm in the Pro Trader. Can I go inside the Discord? Yeah, I sometimes I see myself and I'm like, sometimes I see myself on stream and I'm like, do they think I'm like frozen? But I have to like turn my face. I've got like screeners that run across here. You want to watch this very closely here? You want to watch this prior low over here? You could begin watching this kind of stuff here, to be honest with you, but watching this fairly closely. You could make one dip. There's a little fucking sneaky fucker down here. We're just going to call it here. It's a little bit lower, but it will know if it blasts through here. Be really careful there. There's going to be a propensity to want to sell this.
City CEO
For the rest of the day here, so be very careful. You lose this, if we lose this here, we're gonna blast down to probably 50, 60 points, somewhere like that. We'll flush out all bulls for this week. You know, what's crazy is I'm looking at the volume on call buying right now. It's insane. And Gamma disagrees with that call buying, but I warn you that the bulls are here. They just don't give a fuck. They buy every hourly trigger. They're just like bam buy, bam buy, bam buy. Nothing has stopped call buying today. There's hedging today too, but there's still like the whole move down. They've just been buying 6,300, 6,300, 6,300, 6,300. It's worked a lot. So if you like look down here, you know, every single pullback. Oh, sorry about that. No, it's supposed to be a little bit higher, but every single pullback on the hourly trigger, bought. Buy, 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 buy. Same thing down here. Buy, buy. And they're buying again right now. So if it works 20 times, you don't change it. Now, the more important point here is, if the hourly trigger is lost here, this would be a first this would be a first time the hourly trigger was lost since the 21st of May. So this would be a pretty significant development for buyers. It'll be interesting. And noteworthy too is that we there's like some other noteworthy stuff here. We tagged 6,300 in SPX. There is a ton of supply there. It is massive. Now, you're not going to break through it on first attempt. We already know that, right? Let's take a look at that real quick. A couple things to look at here. Let's go to net gamma. Just SPX. Oh. Hang tighter. We'll go look at this together. So I want you to see, like, this is 6,300. This is like, the wall is here. Like, the call wall is right here. You could call it this, I guess, but the call wall is right there. This is, you know, if this is the call wall, this is, you know, you shall not pass. And not only is this you shall not pass, but there was rolling of calls above this 6,300. This was lower. Hold on a second here. So into last Thursday, I want to say, this was lower. Hold on here. Hold on here. Let me move this over. Just give you like a visual representation of what I'm saying here. This was like right here. And this invariably looked better. So you had, you know, like the top of 6,300, slightly higher at 6,400, and slightly higher at 6,500. This looked pretty good into end of last week. What this shows is that your call wall is actually up here, like 6,500, believe it or not. But what happened was people began pulling in their call buying from 6,500 and 6,400 and rolling them back to 6,300. Right? You had, well, not rolling them back, but not adding any more. Should be a better way to say it. So what you see now is, what you end up seeing now is ramping of 6,300. This would be Thursday, Friday, and then yesterday, and even today. And they're just like loading up on 6,300, and they're reining in their expectations. They've left this stuff on here or some OTM calls, but 6,400 is not growing. This needs to grow, and this needs to get higher. You need like overwhelming bullishness, higher and higher, which we're not seeing yet. At this moment, still not seeing it. So, you know, this is 6,300, and there's something else significant here too, which is I want you to look at this strike right here. This is 6,200. Right? And if we're hedging, this gamma here should be lower. But when we did hedging like last week, now there's no hedging. So what's happening is the gamma flip is marching higher. And currently we're trading what? 624. Right? So let's look right here. This is SPX. On the low, we were trading 6,259, right? Let me bring this back over here. So we're trading, this is 6230. This is 6250, right? So 6250 right here, we're trading like right here on the low today. Right? If we roll one more time down right here, you know, it's quick blast down here. That's kind of an elevator shaft, but more importantly, if you break below this, it's elevator shaft time. There ain't nothing down there. So let me just show you this simply for you to look at, okay? So This dip was bought right here, right? This is 6,200 right here. Think tight here. So here's 6,250 right here where it was bought. So we bought this right here, right? Buy this right here, right? If we fail to buy at 12 o'clock, if buyers don't step in and sellers step in, hasn't happened yet. Well, we don't know this, but so buyers bought here, right? This yellow line is. But if they don't show back up here, right, you start to creep below this 6,250. And it's like straight elevator. It's straight down. Now, not only is that straight down, but if there's any break below it and hold underneath it, you know, this is the true elevator shaft here. There's nothing from here to, I believe, 5.9. I want to say that all this is gone. I mean, it's there, but it's nothing. Turn that to yellow. Turn that to yellow. Turn that to yellow. Turn that to yellow. And do you see this 6,000 down here and all this like 5,900 and 5,950? That's a straight elevator shaft. I'm not saying we're going there. I'm just saying if there's an unclench, there's 590.50. Maybe this can show it better. I'll draw it like this. If you lose this here, right? If you lose this 620, excuse me. If you lose this 620, it's a straight elevator shaft down to you know, right there. And there's two pretty big legs there. There's like a leg right here, and then this one is like straight down. It's like, boom, bye-bye, see you later. We're not there yet. There's nothing saying we're going to do that today, but I just want you to know that this is looming. It sits here and sits here and sits here and sits here.
In Pennsylvania. Some of the world's biggest businesses pledged tens of billions of dollars to accelerate the development of AI in Pennsylvania.
And there ain't nothing down there.
Flashy investments expected to draw praise from Trump.
Now you can look at this more simply than that too, which is
said it would put $25 billion into data centers needed to train AI models and related infrastructure in Pennsylvania and the surrounding region over the next 2 years.
This is your poop island right here.
Promised another $25 billion. An AI startup, CoreWeave, announced.
You got to kind of stay right in this zone right here. 620. Any of this is fine. Buying all that's fine.
Also, the companies that are involved with this as well, the power company.
But you lose this here, and it's like.
And Constellation Energy are part of a group.
We be partying. I don't think we're there yet, but.
Electricity generation in the area. That's according to the White House.
Just be aware of it. You wake up one morning. Like if we close on a low, like you close at like 6250 on SPX or 6200 on SPX on a 4 p.m. close. You get one bad report, one bad data point, some bullshit retail sales or whatever, and you slip underneath it, and it's like woo, elevator down. And we've got some reasons for elevatoring down. We've got expiration OPEX. We got end of month. What's fascinating about this is, let me go back to this chart really quick. You might think that's doomish, but it really isn't. If you scale out just a little bit, right? So if you scale out just a little bit here, now that's still trend. But you see where trend is? It's here, right? Trend is this daily trigger right here. So I want you to think about this too. You can go into, let's say, month end, blast all the way down here, literally, boom, all the way down here, and stay on this like extended bull run. Like literally still in bull run, still in like August up. For any of you that believe in August up, you're still in trend. And why does that matter? If you look back on every extended bull run in summer or failure, if you look at every single like recent in modern history bull run, I want you to go look at this. Go look at every year in July. There'll be like a week, like WEAK, like a week in the middle of July, right around now. Like July 14th.
Speaking on CNBC now says AI is a competition between US
Listen to me closely here.
Standards.
You'll get this week right now. Right? Now, if trend holds, that's all the way down to 59.50. If that holds, we have continuation for a bull run into the rest of summer.
We're part of Magna still.
So I want you to think about, like, we can go all the way down to 59.50 and still maintain a bull run for summertime. That's how high we are right now. They're trying to send this lower right now. There's a rejection on the half-hour trigger and the 5-minute trigger. It's up here. Some rejection going on above. Well, you can't see that. There's some rejection and some momentum coming from the upside down right now.
Fourth best chip. So saying we're selling China our fourth best chip.
Watch this green box right here. Now, noteworthy in this, right? So they start blasting you down to like 618, and then you start trading 600
ahead of China,
and 5950 or whatever. We can literally recover on August 1st and be moonshotting once again, like bulls still alive, which is fascinating.
So Ludnick says that, specifically quoting him directly, he says, you want to stay one step ahead of China, so they keep buying our chips. We need to get the Chinese developers addicted to US stack.
Yeah, come on, baby. Make that new low. We're taking a stab at it again at 12 o'clock right now. And look at that shit right there. Along here, take your stop, send it all the way back up to where the stops are. Coming right back in again, wanting to sell this down. Not quite at party time yet. Need to get below 62.50. So watch this down below here. So you see what the price is right here.
Lennox says South Korea, China, and Japan dump steel in the US.
Let's leave that right there. Put this in the front. Need to get below 6250 for Beartown. We're gonna go vertical to the downside.
Lennox says we're not charging tariffs on raw steel. We just finished items.
Dixie still cranking, trading 98.606. Take note of the failure on Dixie back in June 23rd. They had a failed breakout at 99.335. It's a big, big number, that $100. Spoo's parked right now on the top of the world. Map. Nope. Can I go to Bookmap really quick? Oh, yeah, look at that. Hold on a second here. I always wonder who this is going to flush out. Like, I want you to think to yourself right now, will this, if we drop here, will your account explode? That's what I want to know. If that's true, you shouldn't be in the market. You have no business being in the market if your account will explode right where we are. Look at that beautiful fucking target down there. There's 6255 right there. We can easily trade this today. We can trade that right now. And that's that. I believe that's that 6250 or 6200 that I was talking about. Hold on here. We're not there yet. I don't trust these fucking dealers. These fucking guys right here. These fucking guys right here. Like, you see that tick right here? I want you to see this tick right here. This is where they bought. And that fucker right here. See where my little white hand is right there massaging that fucker? Don't trust these fucking bulls, man. They come back in. They bought again. They're still here. See it right there? Right there. Come in. There's a wick right here. You see the wick? They're relentlessly buying still. They don't fucking care, I promise you. That, like, bulls don't care. I'm watching the buying come in here in the background. They don't give a fuck. They're buying it all. As a matter of fact, I got something I'm reading to you. I mean, even JPM is like, don't worry about it, bro. GS is a little bit more. GS is a little bit more bearish on this earnings season. They were bullish on this bank ERs. JPM is like, I believe JPM is like full bull. GS is like, eh. And do not discount bulls here because like asset managers, they're just getting long right now. These are like the elephants. These are like the big boys.
U.S. Commerce Secretary Lutnick said
Like if they need to put the dressing on the window for the end of the year, and like we're in July 15th, these guys, like they try to close out their year with some window dressing. You'll be looking back here at 624 going, Jesus Christ, we're trading 700. They were accumulating all along the way. See them, they're stepping in right now again, right here. Do not discount these buyers.
That concludes the Lutnick's interview on CNBC.
We're going to find out right here. Let me get one more chance at it. Yeah, I think 650 is easy. I think it's still easy now. I can show it to you right now. They're all loaded to the tits to 650. I mean, I don't think this is retail. And don't forget, too, maybe it is retail. I don't think that it is.
According to Energy Chief, U.S. is mulling creative deals to refill oil reserve. To further detail into this, then, the U.S. is considering creative ways to refill the nation's depleted SPR as it plans to start slowly refilling the massive oil cache, according to Energy Secretary Wright, speaking in an interview. NATO Secretary General Rudd says secondary sanctions on Russia over Ukraine could hit nations like China, India, and Brazil very hard. Marine Le Pen from France says that if France's PM Bayrou does not revise his public spending plan, we will seek to topple him.
Close that out. 1 minute trigger flattening, 5 minute trigger flattening, half hour trigger flattening. And VIX cooling a little bit, just trading sideways. Watch out for another squeeze here. $24.84. Right about there. It's right about there. Right here. That's where they are, like right there. That yellow. Easy on the rise. It's a little bit lower. It's like right here, but let's see if they can hold this.
And France's hard left lawmaker Qqq says lawmakers won't vote for PM's public finance plan and they will act oust government if it seeks to ram it through parliament without a vote.
I'm reading some of the speak here in the background, and like Lutnick is all over the place. Like Lutnick is like the Indonesia deal is 0% on U.S. goods, but includes a tariff on their goods, which is kind of comical. That's not a trade deal. That's one-sided. And then he goes on to say that Lutnick says we're not changing tariffs on raw steel. Just the finished steel items. So tariffs are changing on steel. There's a lot of words. There's a lot of wordsmithing here going on from Lutnick. There's another argument here. I'll read this to you again. They're calling horse shit on trade deals. The banks are. This is JPM saying market resilience continues and investors seem likely to look through any negative trade war updates until August 1st, where the consensus view is that Trump either rolls that expiration date or reduces aggregate tariff levels back to the 10% experienced during the first 90-day delay. That said, some feel that the performance of the markets emboldens Trump to take a harder line. I still don't like that they're not talking about. I would be fearful of a company that traditionally relies upon imported goods getting hammered on their bottom line in this ER season. You normally don't see those companies report, though, until after big tech, which is usually theoretically immune from this kind of stuff to some extent. But as you come into like some of these other reports, I think you could get some real nasty negative. I don't think that's being pushed as a narrative yet. There's like there is a downside to tariffs that's not taxation on you. It's taxation on them and their corporate profits. Now, even if they're not seeing them today, those companies specifically should have a pretty dour outlook on those corporate profits. Because I'm looking at durable goods. Services you can't really mess with. It's like hard, like hard to fuck with services inflation.
At a 1-year high at 3.613%.
But like durable goods is showing. We have a durable goods report coming out this week too. We have a durable goods report that's showing that someone's eating those profits. We got PPI tomorrow. PPI will give more insight into that. But like PPI, durable goods will say who. Like you want to pay very close attention to PPI and durable goods and see who's absorbing those tariffs. Very important. Now, there's something else here too, which is the over dramatizing of tariffs. And this is kind of where like people get tripped up. And I've explained this with the beer can analogy. I don't know how many fucking times at this point. But your input cost is so low on shit. I'm not kidding here. Like your input cost on people don't realize what it costs to mass manufacture shit. It is dirt fucking cheap. Like I use the Cheez-It analogy or whatever. But when you see like the raising of prices like that, it's like the Cheez-Its total cost, fucking like literally, I'm not shitting you. Like I saw a box for $6.50. It was on sale for $5.50 or $6 or something recently. I posted in the Discord. That fucking box in total, finished and shipped, maybe costs $1, $2, $3 max. And that's even with tariffs included in them. So like if let's say it cost them $2.50, their tariff hit is probably like 30 cents, 15 cents. And even then they can change packaging, they can change suppliers, they can change fucking you name it. Shrinkflation. There's like all kinds of shit they can do. So if you're looking for like a bare reason for tariffs, maybe a hit to bottom line if the producer didn't absorb it. But that's the only like inverse negative thing that I see on like the tariff doom. In its current form, at least. Not only that, I looked at the DHS. I just looked at the DHS numbers for de minimis imports and shit. Nobody has fucking stopped. I mean, those numbers got to be wrong. Maybe they get a revision or something, or maybe people are going to prison. I don't know. Or maybe people just don't realize the increase in cost. Like there's a whole bunch of ramifications, or why, what, or whatever. But it could be that China's eating those costs. So like, let's say you get a thingamabob. I don't know. You get a pair of fucking scissors, right? You get a pair of scissors, and you're paying China $1 for them. We get hit with de minimis fees, right? On these tariffs. If you go to like Temu, and I'm serious, you go to like Temu, AliExpress, DHgate, I don't know, fuck whatever the fuck the rest of them are called. But if you go there, some shippers are trying to sell you now the scissors. Say they were $1. They're trying to sell them to you with unknown de minimis shipping when they arrive. That's dangerous. You buy that, and it could be like the fucking $1 pair of scissors is now like $15. Maybe not 15, but it's stupid. In relevance to $1. But there are other sellers on these sites that are telling you, oh no, it's only $1.05. or it's still $1. So their markup's either stupid, they're paying their people less, or they're avoiding these tariffs, these de minimis tariffs from countries that are allowing them to. Maybe they shipped like a whole fucking tanker full of goddamn scissors to some country that still isn't enforcing tariffs or de minimis. But notwithstanding, if you look at the Department of Homeland Security income from de minimis, it's fucking through the roof. It's like vertical. It's like one bar right here from the month before, and then to the moon. So there's a ton of money coming in. And that also says that you're not stopping buying and spending. De minimis, like it's telling on the side of the consumer that if they're collecting all this de minimis and a whole bunch of de minimis is not coming in, is it fraud? Is it producers eating it? Is it no one gives a fuck? Is the consumer still fine? Hey, my dollar scissors, I'll pay $1.05 now. And there is some circumvention there too. If you've got a U.S. company trying to pass along these fees, I went and looked at this week. So I want to tell you what I did. I had a conversation in the Discord with Doggone It last week about that I'd gone to the AliExpress subreddit, and I was checking in. Like back in April, May, people were like, do not buy anything from foreign countries. You could get hit with unknown shipping fees. Very dangerous. You hear stories too, like you'll hear like anecdotal stories, like, oh, I bought my usual $10,000 order of orange fake Fisker scissors, and the bill of lading was like $31,000 or something insane like that. I can't compete with that. I'm gonna go bankrupt with my drop shipping business or whatever. And that kind of like drove a hole in my head. I was like thinking about it, and I'm like, so you got like, if this what I'm about to say, if it wasn't there before all of these tariffs, and I mean the gouging from businesses, not the producers, but the businesses, and that's like SOP for the U.S. Oh, we have tariff threats, raise prices. We have more tariff threats, raise prices.
Speaking on
oh, we got Trump rolling back tariffs. Okay, just leave prices the same. Okay, we have more tariff threats, raise prices. Okay, we've got tariffs definitely on now. Raise prices again. You get that? So you get U.S. companies from, let's say, October of last year, September of last year. Like, inflation is cranked to some extent. If you choose to buy that stuff, right?
On the feed for you.
You go and look at food. If you go look at, like, anywhere I go right now, everything I do, my money is down 30%. Easy. Everywhere I go, everywhere I look, everything I buy, every service, every durable good, it doesn't matter. Taxes up, everything is up. Literally, I got probably from last year, probably have 30% less buying power, at least. That's from like taxes, tariff threats, U.S. companies trying to force inflation on me, right? And of course, I eat it, you eat it, we all eat it, right? We start passing along to each other. So if you're ever looking for like a cheat code or something, it's kind of like bouncing from McDonald's to Culver's to buying steak from Aldi, back to McDonald's, back to Culver's, back to buying steak at Aldi, right? You're like rotating where you're spending your money. I was like, yeah, I'm going to go look back on the AliExpress subreddit. So I went back there and looked. And these guys were like, oh, no, they're hacking it now. They're like, now it's glaring. And Doggone It had mentioned it in the Discord. He had said, he's like, because of all this, don't buy anything on Amazon anymore. He's like, you just go to AliExpress and choose the I think it's like good or something it's called. There's like different ways to buy. And one of them is like, this is your guaranteed price, even with de minimis charges on the shipping. So I went over to AliExpress and then I was comparing the price of goods from these drop shippers in America versus what's being charged in AliExpress right now. And it's vaster than it was pre, or the difference is vastly different than pre-November. And so you can literally right now score a fucking deal if you go direct to the producer, where the U.S. company is like, fuck you. We have to keep raising prices due to all this, and what we're incurring and what we're charging. It's like the U.S. Company is passing this along to you, but the producers are not. They're not, and are not nowhere near the scale. And that goes right back to the can of beer that I talk about. It's like the beer producer that's like, oh boy, you got all this stuff coming. I got to raise this. And they were starting this. We're in July. 7, right? 8, 9, 10 months ago. 10 months ago, they started the raising prices, which makes everybody else have to pay more, right, in the U.S. But there can be some hacks in there along the way. And I was fucking shocked. So after Doggone It said something this week, I went back, this past week, I went back and checked. And I'm like, okay, I got a list of things on Amazon that I want to buy. And these are kind of high-priced ticket items. Like, I want to buy a new home theater projector. I want to buy this and that. And I start looking for these items. Like, I need a new espresso machine. My espresso machine needs calibrated. I don't want to pay for it anymore. I'm like looking at espresso machines. And I'm just like, holy fuck. Like, the price disparity used to be, maybe you save like 20%, wait 30 days. Some of this stuff is like 50%, 60%. That much of a difference. So if you don't want to pay tariffs as a tax, at least currently at this moment, there are still, one way or another, however they're doing it, the producers, they're still low price, one way or another. How they get there. Even though your local company is saying that it's not, especially like durable goods, like durable goods in particular, like your Cheez-Its and your beer and your beer cans and all of this stuff. SPY, not looking good here today. SPY looking like it wants to shank the market to the close here. Sitting on the edge right now. Downside targets, 620 on SPY and 618 and change. Would also be interesting if we close down there today. If you close and get some bad data tomorrow, we could start elevatoring down for a little bit. That target is like 6,000, 59.50. Do I think we do that tomorrow? Probably not, but maybe into the end of the month or something like that would seem reasonable. SPY losing support right now.
So, a reminder, in about 4 minutes' time, we're expected to hear from FedSpar, speaking at the same event of this time speaking about unleashing a financial inclusive future. Videos on the feed.
Not quite ready just yet here. Starts in 4 minutes. What's this vibe session? Recession? I don't see anything that's. I don't see any recession indicator that says we're going into recession yet. I don't see a single indicator. Powell is pro crypto. Senator Loomis, pro crypto. What does that mean? He's been bought. Powell has repeatedly failed the American people and crippled America's competitive edge. It's time for actual leadership at the Fed. Chair Powell must resign now. Oh, Christ. How about put a fucking dick in your mouth? Loomis, whoever the fuck you are, crypto bro, fuck off. Like, who is this fucking... Who's this Loomis guy?
Does not comment on monetary policy or the economy in remarks to Financial Conclusion Conference.
What is this? Well, I mean, what am I going to dig up on this guy? Like... She's from Wyoming. That tells me all I need to know. And she's 70 years old. That's all I need to know. I don't need to know anything else. I've spent a lot of fucking time in Wyoming. No offense to Wyoming. I like Wyoming, by the way. But that's all I need to know. Talk about a bubble within a fucking bubble. Have you guys ever been to Wyoming? It's like one of those places where it's not easy to get here to there. Fuck, I know places in Wyoming that still don't have internet. There's some nice places in Wyoming, too. I bet she could have been bought with like 10 grand. Didn't say that, but it's probably true. In 2024, she introduced the legislation to create a strategic Bitcoin reserve, which would entail the Treasury and Fed Reserve would buy 5% of the global supply of Bitcoin, which it would subsequently hold. Loomis purchased Bitcoin in 2013 on her son-in-law's advice and became the first U.S. senator to own cryptocurrency. Probably not true, but she's probably the loudest one about it. Her enthusiasm for tech has led her to being known as Congress's crypto queen. Loomis owned at least $230,000 worth of Bitcoin in 2021. So yeah, she's got a fucking reason to be a crypto queen. A federal transparency in October 2021, CNBC reported that she had violated the Stop Trading on Congressional Knowledge Stock Act of 2012. No, I think that the fine is nothing. But a federal transparency and conflict of interest law, which by failing to disclose within 45 days a purchase of Bitcoin she made in August of 2021, worth between 50 and 100K. So yeah, she's kind of wrapped up in it. So yeah, I can't give her any. I was trying to see if there's any kind of like redeeming quality, but it's like an insider trader saying it's like somebody that says I've owned Apple since day one. Stop investigating Apple. It's pretty blatant. 5-minute trigger is crossing the hourly trigger now. We'll go up there and test that really quick. That's at 624.80. See if this is the way lower. There. See if the way is down. Half-hour trigger is beginning to come down to 60.25.26. That little yellow line right there. That's that first long right here. It got stopped out above. Half-hour trigger is coming down here now. Momo coming to the downside. Yeah, I like Wyoming. I spend a lot of time there. We have a ranch. I have a ranch there. I have a family ranch in Wyoming. It's 7,000 acres. Not Wyoming, but it's on the border in Montana. It's in the Black Hills, if you know Wyoming. And I've spent a ton of time in the Tetons. I spent a ton of time driving through like Cheyenne. Or actually, I've come in from the east, the west, the north, and the south. They got a really cool road there. If you ever drive east and west, there's a road in Wyoming. I believe Wyoming. It might be Montana, but from what I recall, there was an east-west passage just north of Colorado. There's a road that's like a 2-lane road, and it has no speed limit. It's either Wyoming or Montana. I can't remember, but I think it's Wyoming. And there's no speed limit. The signs just say drive responsibly or something. You could fly down that road. And like every time I'm in the East Coast, I'm like, what do you mean your speed limit's 55? Like you go to like Utah, it's like 90 miles an hour. People flying 100, 120, 110. I don't know if like Route 95 or something is still like that, where it's like 55 miles an hour. The last time I was on Route 95, what was that? The I-95? No, it's not I. They call it Route 95, I think, if you're from the East Coast. Like first time I got on that after doing like 120 in the West, I'm like, what the? Is this like a highway for ants? Like, what do you get faster? But Wyoming is a good place. The only thing that I would say about my commentary on it meant more about the insularity of Wyoming. Like, I don't know if you've ever been to some of those middle of nowhere places in Wyoming, but they're fucking middle of nowhere. Like,
with an interview with Candace P.
Here, let me see one of these towns in Wyoming.
Signals U.S. tariffs may be here to stay.
I'll point one out in particular. Hold on here. Let me ask you guys if you've ever been to these places. Hold on here. Have any of you ever like driven through? What is that?
We have posted out the article on the feed for you to read through as well.
Like Cheyenne to me is like big distribution hub.
In about 8 minutes time, we're expected to hear from Feds Barkin giving a speech in.
There's one north of it that I think is like super fucking quiet.
Beyond today's data. Reminder, this is the speech he gave on June.
Yeah, there's Devil's Tower.
Text is expected, and there is a Q&A as well with audience.
Like Devil's Tower is the middle of fucking nowhere. That's in the northeastern corner. Rapid City is kind of busy. That's not Wyoming though. Like I've been to Casper. I've been to all these fucking places. I've been to Casper. I've been to Casper's kind of similar to Laramie in my view. Then we get into like the beautiful part of you go like east or west. Excuse me, if you head west, like Cody's middle of fucking nowhere. Wind River Reservation. You ever see that movie Wind River? Wind River is fucking gorgeous. It's absolutely stunning. Like you got Yellowstone in the top left-hand corner, right? The top western corner. And then you head down to like Grand Teton in Jackson. But if I had a favorite place in Wyoming, it's probably, where's the name of that town?
US Commerce Secretary Ludnick, speaking on NVIDIA, says NVIDIA H20 chip exports to China are part of rare earth negotiations.
There's a tiny little ass town in the southern Tetons.
NVIDIA H20 chips
Pinedale.
China are part of rare earth.
It's on the western slope of the far southern Grand Tetons. Now, don't think that those are not badass mountains.
Trump, speaking to reporters at the White House, says that the Fed should lower the rate.
The like Pinedale, that whole like southern tip of the Grand Tetons, they're tall as fuck. Like 15,000 foot mountains in the middle of fucktown nowhere. There's a place called Pinedale. If there was like a place to go in Wyoming, I'd say that's the place. And you could make an argument for like you can make an argument for the Black Hills. It's fucking beautiful there. They had a fire there. Recent-ish. Before that fire, it was even more beautiful. SPY beginning to lose support right now. Now, do note that we're not below 6250. So look at SPX right now. We're not below 6250 on SPX, so we're not an elevator down
Trump, when he was speaking about
territory just yet.
On Russia, or secondary sanctions on Russia. So he says, too bad if there's no deal in 50 days.
5-minute trigger is coming down to cross right now. The hourly trigger, half-hour trigger is on its way. I'm going to be putting on some bear music here in just a little bit.
Trump,
I've been to Sheridan.
We shouldn't
I'm
target.
trying to look at all these different places. I've been to Bighorn National Forest. In like, talk about disparity. Like, Wyoming is a weird place. Like, if you can go to some places in Wyoming, it's like dirt. It looks,
that's more
reminds me somewhat of Nevada.
Zelensky should not target Moscow. But different is why there. But just a reminder from the what Trump means about the 50 days.
But then you go to like other places in Wyoming, and it's just fucking beautiful.
100% tariffs on Russia. So and that secondary sanctions on other nations that
trade to the downside is to 62 or 62298
struck in 50 days
and 62244. And 6244. All right, put that down there. Trump on a tear right now.
And they need reliable ways to.
This is Fed's bar speaking.
And when they have the funds to pay them. Low-income households may need quick access to make just-in-time transactions, such as same-day utility bill payment through their bank, or to quickly receive funds from a family member to cover an emergency expense, like an unanticipated car repair.
Seeing the S&P 500 extending decline to session low, Nasdaq 100 pairing gains.
The value of controlling precisely when and in what order payments settle may be less appreciated. With real-time payments, households and businesses can have better control over payment flows, helping them, for example, to avoid unexpected and unwelcome overdraft and non-sufficient funds fees. Many other countries are seeking methods to improve the speed of payments. In India, for example, the implementation of the Unified Payments Interface, which is the country's digital instant transfer system, has allowed consumers to see some of these benefits in action. UPI is available for free on a customer's mobile device and can be used for merchant payments, bill payments, and money transfers, among many other things. Since its implementation, the Reserve Bank of India has noted an increase in financial inclusion, particularly in rural areas where bank branch access is difficult. We have seen the benefits of technological advancement and innovation here in the U.S. as well. Today, technologies to improve the speed of payments are being implemented across platforms and products, providing consumers various ways to move money quickly and easily. The Federal Reserve, as
The
a
Trump
part
from
of
Brazil
its
says
mission
we
to
have
foster
tariffs
a
going
safe,
on.
efficient, and widely accessible payments.
Yeah, I think Wyoming's got nice places, but tell me am I lying here by saying that if you thought like if you look at some of the loneliest places in America, Wyoming certainly sits on that list
and households.
in the lower 48.
We launched FedNow, an interbank payment system for banks and credit unions of all sizes.
Trump
You can't say that ain't true.
says I'm on
and
nobody's
securely
side.
transfer money for their customers.
Says
Trump says I'm on nobody's side.
19% tariffs
We are
on
encouraged by
Indonesian goods.
innovative private sector engagement with the new platform and instant payment,
He's got some conflicting statements he's making to what Lutnick's saying.
rolling out new services that can benefit their customers.
Trump is contradicting Lutnick right now a little bit.
Instant access to earned wages, which can make a big difference in how
Let's see what some of Lutnick was saying earlier.
we expect these types of innovations will continue to expand in the coming years and be delivered in new contexts, ultimately bringing broad benefits to liquidity-constrained households.
I don't know. They say so fucking much that I don't know.
We manage payment inflows and outflows.
SPOO's now trading, SPX now trading 6250.
The ups and downs of income and expense. I think many people would be surprised how
Just note here that there's an elevator down.
Fed's 2024 survey of household
So we're
economics,
trading 6250 right now.
when asked how they would respond if
Hell, there's no bottom here
dollar expense,
till 6200.
of adults said they would have paid at least in part by selling something
We are at the elevator down stage,
or overdraft
or the first elevator down,
be able to pay for the expense. When looking at household
which is right here,
$1,000 a year, this number increases
and it's like 618.36 or something.
to reasonably priced credit to cover these sorts of expenses is therefore a common need, especially among those with lower incomes. These households have no financial slack.
Just so you can see it right there.
Contrast to the more costly and riskier sources of
We're
credit
floating around in nothing right now. There's no support here.
offered products that are helping to increase access to safer, lower-cost forms of small-dollar lending.
Also note that
Bank regulators took a helpful step in this regard in 2020 by issuing guidance. According to that guidance, responsible small-dollar loan programs must treat customers fairly, have effectively managed risks, and
I'll post it in the Discord again.
policies. That means, first, that products are offered in a way that most customers successfully repay their small-dollar loans in accordance with the original loan terms, which is a key indicator of affordability, eligibility, and appropriate underwriting. Second, it means repayment
Trump
terms,
just reiterating
pricing, and
his
safeguards minimize adverse
comments about
customer
Powell,
outcomes,
saying Powell is too late.
including cycles of debt due to rollovers or reborrowing. And finally, it means repayment outcomes and program structures enhance a borrower's financial capabilities by contributing positively to their record of servicing their debts. Most banks that have offered smaller dollar loan programs since 2020 follow these principles, and it has had a positive impact on the loan terms they offer. Loan terms have better matched customer needs, and rates have come down. Small dollar loans that have the potential to disrupt the market for more costly alternative financial services are bank products that provide a straightforward application process, clear loan terms, certainty about approval, strong likelihood.
Trump's all over. Trump
says that we're talking to the EU.
Another channel for
My God, dude, he is the shit that he says.
financial data to supplement the traditional measures that banks have relied on
It's just like off the fucking cuff all the time.
with limited or no traditional borrowing history. For example, lenders can evaluate cash flow, steady income, and bill payments, As a measure of the
Like I was looking at some crazy ass shit last night. Like
lenders to take a second look.
like you got like Epstein is like dividing people.
Credit score based.
And then you've got like the House no longer the House voted against releasing the Epstein files.
Data
like,
often allows
wasn't MAGA like asking for the Epstein files to be released, and now they're saying they don't want them released? Like they did, but they don't.
And struggle with meeting an unexpected
I saw some other crazy ass shit yesterday too. Like there was an argument that
a set of specifications that can allow
the White House is launching an investigation into
permissioned consumer financial data that can
the White House is launching an investigation into the auto pen for Biden, but they used an auto pen to send out subpoenas. I'm like, what the fuck is that all about? Can you believe that? Like investigative subpoenas, you're getting like an auto pen signature from the person doing the investigating. I'm just like left and right and left and right and like where the fuck does all this stuff come from? It's all bizarre. You got like Trump saying Powell is too late. Like, I'll be honest with you guys. Powell is not late. That's an incorrect statement. Powell is not late. Powell is doing the right thing right now by waiting and seeing. He wants to you want to see the economic impact of these tariffs. I'm telling you right now. I'm gonna tell you right now. You will not see Powell shift
in regards to Trump's meeting
until all this bullshit is finalized, all these tariff bullshit.
It's calling to refine trade deal.
If we're done with trade deals ever, you're never getting you're like until that happens, you're never gonna see him like shift his opinion.
Trump says we're going to see what happens with Putin.
He ain't never doing it. Ever. If anything, he'll raise rates. I'll be honest with you. Like, he ain't cutting for Trump. Zero. Not right now. SPY still orderly manner, staircasing to the downside. I'm gonna take a quick break here. I'll be right back with you guys. I'm just gonna get up, do some. I gotta work out. 1 p.m. right now. We'll see what happens here the next half an hour or so. Dude, where is hold on a second here. Where the fuck is this where's Trump talking? I thought this was just tweets, but hold on here. Let me see if I can find them. None of these live streams I trust. And there's like fake. And there's like ones that look like legit. Like some of these fucking YouTubers, they just like repeat. They just like play Trump 24 hours a day and claim, oh, there we go. Hold on here. Nope. This is on pause. I got something here on pause. It looks like it says we'll be right back. If he comes back on at all, I'll put him on. We're going to see what happens with Putin. I expect to meet UK's pro Starmer in Scotland and refine the trade deal. I'll meet UK's PM Starmer in Aberdeen. We're talking to the EU. Powell is too late. Yeah, the fake live feeds are for Trump are fucking everywhere. They're like, I'm like, is this live? Is this not live? And there's no stream from the news squawker. Okay, I'll be right back with you guys. Hold on here. I gotta put a break in here to separate these two things. Be right back.
Surely expecting the Federal Reserve repo operation data.
"36 counterparties take 198.277 billion at Fed reverse repo operation."
As Barkin says, more price pressures are coming from tariffs.
Barkin says price pressures won't be as significant as 2022.
Hello, everybody. This is Donald J. Trump. Yeah, it's really me. And I'm going to do a little advert for Financial Juice. You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Can you believe it? Instead of a 67% tariff, you get a discount. It's huge. Very, very big. Very big. It was as big as my hands. Huge. Well, not as big as my hands. My hands are bigger. What are you waiting for? Come on, do it.
Trump says that we have a couple of deals that'll be announced. Trump says we're going to have access into India. Trump says Indonesia has valuable earths and metals. Excuse me, valuable earths and materials. So any place where Trump is currently speaking at the moment. Well, it's from just a pre-tape, excuse me, a playback on Fox News. Trump says we want tariff money coming into the US. Trump says we're making progress with the EU. adding we're making progress with the EU, but we already have the letter.
Well, it's me again. It's Donald J. Frickin' Trump, okay? And if you're sick and tired of hearing my voice in this ad, which is pretty sad, all you've got to do is go real time at financialjuice.com/purchase and save 67% on a subscription. Beautiful, big, huge discount. So what are you waiting for? Come on, do it.
Trump on EU says, I think everybody will be happy. US threatens to quit IEA over green-leaning energy forecasts.
Trump ends his remarks to reporters at the White House.
Check 1, 2. Wait, can I put this one over there? Let's go. Conceded to bears today. I bought 618 puts yesterday, right? How did I concede to bears today? I don't know. We'll put this one on really quick here. I've got other hedges on. I've got a plethora of hedges here.
Tariffs still uncertain.
So this is with triggers and time frame and all that stuff. So move that over really quick. Yeah, I got Thursday. I added I had Thursday puts for 618. I added more 618s this morning. And then I put on 620s for tomorrow. I gotta look and see. I got a bunch of different shit on. I got Dixie stuff on. I got I don't have any Estow on. I've got a hedge on for November. I got a bunch of crap going on. I was looking at my account this morning and I was trying to Damien, this is to you, Damien, by the way. So this morning I'm trying to manage my accounts and I'm I got puts on, opening puts, adding to puts, then I'm closing puts in the morning. And then I was buying calls. I had calls go green for a little while. I think I made 7% on them. I bought some calls down here. Where did I buy some calls? Right here. I didn't actually get long here, but I got long here. This was just an example for you guys, if you got long here. But I started buying calls down here. Somewhere in here and here I was buying calls. I caught that rip up. And then this is the one, this was the inflection point at 12 o'clock, I think. Yeah, right here. So there was 12 o'clock. We had this squeeze up right here. I think I made 7 or something, 7 cents on, it was 90 cents and closed at 97 cents or something like that. Got out. I was like, yeah, I'll get back in above here if we go higher. So closed that. Still have a bunch of bearish shit on. I think we get one more down. The bigger question here, though, is, I guess this would be the thing that we're left with here today, which is, I'll show you a bunch of this stuff here so you can see it. We got targets. We got downside targets everywhere. The weekly low is 617.16, 618 up here, the 1618.36. This is a reasonable target right here. Not today necessarily, but that's the target. Now you got to break through this here, right here. So just let me show you this. To trade this right here, we need to break underneath to ladder down, which we haven't done yet. So I would say that the biggest question here today is not so much are we heading down today, We know it's coming soon, right? Well, we know that the bears want that sooner than later. Not just that, they want this trade right here. This is the trade that they want right here. This is the 608, and there's another gap down here at 592. But in general, it's like if it was me guessing, that the most appropriate would be 600 and 598, and then up and out of here. You might tag this lower one here at 92, but we're not there yet. So we're not even on that trade yet. I mean, I'm on that trade, but we're not trading that just yet. Just yet. Bulls are still in control here. So let's look at let's just look at this really quick here. This is SPX Gamma, and we were talking about this earlier. These bulls own this. Like, they literally own. Maybe I can show us better like this. They own all this. They're just buyers here. Just make that green. For lack of a better way to describe this, just in here, they're buyers. So let me show it to you that way. Now, that's 620, right? So there's no real bearishness here. Now, if they lose this, if we trade underneath it, get some new lows going, then it's on. It's literally an elevator. I call it an elevator shaft, but if they lose this, it's straight down. So there's no trade there, though. There's literally no trade here. You can't really take that trade until you're right there. I mean, you can hedge it. It's gonna eventually happen. It doesn't matter if it's now, August, September, or whatever, October. But the front running of this, there's two trades for a bear. They want the first trade by end of month down here. They want that now. They don't want to fucking wait until September. They don't want to see 650 or 648, 640, any of that noise. They don't want to see any of that. So they want the money paid now into end of month. I know that's not, this is showing the 14th, but you get the gist, right? They want to run this fucker down into end of month. And they don't really care if we stay on trend. So like they don't care. They don't care if we blast down here at the end of the month. They don't care if we stay on trend. You remember that about like a trade, like they just don't care. Now, so, and I see some of that. Talk right now. I was talking about yesterday about the bear case, and people are like, "There's no bear case." And I'm like, "Yeah, there is." And this morning I'm seeing like manifestos, like everyone was net sellers last week. Market's getting out, market doom. It's probably not that dire today or at this moment. So don't get too crazy right now. And I just want to show it to you over there. We can literally go down. Whoop. We can do like OpEx and start partying again, So they're still there buying. There's no like, and there's nothing saying doom either. Like, let me just get rid of that. Hold on here. Let's go back closer. Local top, local call wall, local top. If they just keep hammering, if you're a buyer and it's like the buyers are doing, they just keep hammering, all of a sudden, that's gone. And we're up and over and we're running, So I wouldn't be counting chickens as of just yet. Now, the bigger question here is, which I'm sure all of you are wondering, is we have expiration tomorrow. And let's look at a couple examples of this. So we'll do this together. So I did this yesterday. I was doing some research yesterday, right? And also remember this JPM trade. Like, keep your eyes open here, because there's a lot of there's like a shell game going on in the market right now, and you want to keep eyes on certain things. You want to keep eyes on Bitcoin and financials. You want to see if the island is held by JPM and all those companies. Those fuckers will run to the upside. Like JPM, no matter why JPM sell, because they're gonna fucking ramp in a week, 2 weeks or whatever. As a matter of fact, I did this with FedEx recently, and I caught 218, or I think it was 218. I caught on FedEx, and it just fucking it was like if you put a chart of SPY and FTX together, SPY was flat, FTX was way down here, and then SPY ramped and FTX just chased and closed the giant fucking gap. I beat SPX and SPY and Qs by double over 4th of July. Literally fucking double. And went on vacation, came back, and I was like, mwah, right there. So it's that same trade. Let me explain that to you here for a minute. So let me just show it to you here. Can I do a comparison here? I don't know. Can we look at this one? Yeah, cool. So this is JPM, right? Let's look at SPY, right? And let's look at FTX. Can I compare in this fucking thing? So I want to show you this right here. Hold on here. What am I doing wrong here? See this move right here? So this is SPY, and this is FTX. Blast down on their ER, and then super ramp up here. So that move here versus SPY was fucking epic. FTX was epic. So I want you to consider something similar to this with JPM. If they have any kind of blood, shank, whatever, any of that kind of nonsense, or any other ticker that does that in this earnings season, if you see an outside the range move to the downside, and FTX, all the fucking news was it sucks, it's horrible, it's the worst company ever, missed their earnings, horrible, horrible, horrible. And in fact, I beat SPX by, this is from 6/25, June 26th, June 25th, up into July 3rd. So July 3rd, I think I was up 15%, close to a 15% upside move in FTX. Now, let's not talk about that anymore, because this is after, right? No one was on that. I think I had one guy with me in that trade. One person. That was it. Just one. So let's look at some prior history here. Let's look at SPY in bull runs, and let's look at this prior bull run over here. Go back to July. Oh, hold on here. What's going on here? Why is this not working here? Okay, I got going on here. We do a 4-hour. Does that work? Hold on here. I got a lot of wonkiness going on here. Why do I have that on? Why do I have handles on there? What is going on in this? I don't know what the fuck is going on. Now I got handles on Weeble. Okay. Can we still do handles? Something's going on with my SPY right now. It's not working. Weeble's not working for me. I don't know what the fuck is going on. I guess I can't show you this. Maybe I can. Do I have to like delete everything? I'll delete everything. Hold on. Maybe I'm doing something like here. Delete everything. Okay, and then reset it maybe. Okay, maybe that helps. There's a 4-hour chart. Okay, so let's look back here at some recent bull runs. So let's look back here. This is July, right? July 1st. Look what we got going on here. July 12th. This is July 16th. Right in that Vixpiration OPEX. Look at that. Boom, 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 boom. Bloodbath into the first week of August. Bloodbath. Now that's a bloodbath example, right? So I want you to remember this right here. So you've got trend, right? And you've got the loss of trend. Okay? Loss of trend after Vixpiration and OPEX. Right? Bloodbath. That's important to note. If you lose trend in July, middle of month, end of month, it results in a fucking bloodbath. Now, let's look at some other prior summers where we have bull runs and everybody's locked into the bull run, right? We're going to drag you up here for the summer trade and all that kind of shit. Let's look at this one right here. Now, we were in a downtrend here, right? But what's fascinating about this in particular was we turned up higher beginning of June, or July, excuse me. Wait, look at this one in particular, right? I want you to see the, this is July 11th. Today's the 15th, but this is the 11th, 12th, 13th, 14th, 15th. But we held trend. Okay, so if we hold trend, the bull run extends. Let's look at a couple other priors. We got others. It's not just one. It's like they're all over the fucking place. So like, I was looking at them for like years and years and years back, and I'm like, oh, this is interesting. Here's another one right here. We're on trend in July. Yeah, this is not surprisingly right here. This is July 14th. So look at this right here. Right? Blast down and up. And this is the 19th right here. So like you have a big doom week, right? Oh my God, world's ending. Come back on Monday, back on trend again. You know, no rejection, none of that shit. And we're all of a sudden back on trend for an extended summer run. An extended summer run. So you kind of need to be watching in particular. You kind of need to be watching for if we get that middle of the month weakness, do we reject for a new low or not? Right? So it doesn't matter if we stay on trend, we're good to go. So if you start looking, I'm not going to look back on all of them with you right now, but if you look back on all of these like mid-July. Oh, Jesus Christ, I almost dropped my water on the mechanical keyboard. My point here is that if you look back on the middle of July and you want to know, you're like, hey, are we going to do like, are we done in July? Are we going to blast down to zero? You know, are we going to blast down to like depths of hell, depths of hell, depths of hell? Are we going to extend the bull run and have a major blow off later in the year? Like your inflection point should theoretically be over. And then we have 5 weeks this year. So because of where everything falls, there's a little bit more time. You've got crazy stuff coming out. You got fucking 2 Jerome Powell speeches, one at 8:30 a.m., one at an FOMC meeting. You got NFTs, NFP, unemployment. You've got retail sales, durable goods, all these fucking things. PPI. I mean, you got policy shit from Trump. You got Trump too talking about policy on August 1st. Think about that in your head. Like put a little nail in the side of your head and just hit it with a fucking hammer. And think to yourself, like, you got like talk about mass manipulation of markets. You've got a president that is invariably knows this. So you start getting like this, you got like policy stuff, you got unknown fucking unknowns with geopolitics, even though people are like, don't worry about it, everything's fine. Like today Trump told Ukraine not to bomb Moscow. 2 days ago, he gave missiles to Ukraine that can reach Moscow. So you have like all like, you're like, hey, if you guys want to do something, now's the time. And then you got Trump saying something like, we're gonna bring out the worst on August 1st. If you look back on all the like literally all these bull runs from right now into August 1st is the most dangerous time to be long as a bull. And if he was wrapping everything up on August 1st, then you start to see the blah, 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 flip-flopping taco, burrito, fucking whatever the fuck it is he's doing. Even if it's not real and fake and all that kind of stuff. And you got people like JPM out there saying, don't worry about it, bro. They're probably telling you that because whatever that down move is into July and August is going to turn right back up again for that extension trade into August. That's their thesis or feeling on it. Or at least print end of year or something. But now's the time to be wary. Doesn't necessarily mean that you're turning bear or anything. As a matter of fact, I talked to the Discord this morning about a trade that prints fucking now or later. I don't give a fuck. It prints one way or the other. Prints a lot of money. Prints like 300%. But there's easy hedges you can put on. Like when we were up there at 627, anywhere near like 627, 630, somewhere in there, you just start putting those fucking hedges on, and you're likely going to see some kind of a print. It's kind of like it's almost free. It's not quite free money. There's risk everywhere, but it's not a bad trade. 1 for 3 between now and November. Now in November. 162, 170 days into the year, right? You got like, I think it's 100, no, sorry, I misspoke. 129 days to expiry, excuse me. 129 days to expiry. Not a bad trade, right? Just sits there in the background. So on any high, like 630, 640, 650, I don't give a fuck. You just put a fucking you can do it convex if you wanted to, I guess. I didn't think about doing it convex, but anyways, if you look back at it, like all examples of these bull runs, there is a window of weakness. And in almost all of them, we go down. Well, like literally almost every single one of them. There might be one that doesn't, but if you take that trade every single fucking time, regardless if we stay on trend or fight our way back on the first or the first week of August or whatever, or if we get down to the depths of hell early and, it's like everybody's pants is on fire, hair on fire everywhere. It prints like every fucking time, like literally. So anyways, we have some weakness today. That's probably not the biggest question. The biggest question here, likely, I would think, if it was me thinking about it, the biggest question would be, we have expiration tomorrow. And do they close us on a low into that expiration, and you wind up like is it Martin Sheen or Charlie Sheen chasing the hole to the downside, and we don't get it, right? It's like they park us on a nice low into this close, and you wake up tomorrow and the market's fucking, straight vertical down. And they close the door on you in that trade. You're out. You can't even get back in. I guess you could, but when they're trying to set this up right now, you can see it. You can see that they're trying to set up that trade tomorrow, and they're pushing narratives across socials right now. I'm reading them right now. Like I got fucking JPY US dollar unravels coming. I got fucking Rebecca Chong was out there yesterday. Retail AI unwind is medium term bearish. Like they're like, oh, it's bearish from now into November. What else do I got here? I got Rebecca Chong. What the fuck did she say last night? She said she's been on this for like 3 weeks. Because she'll get squeezed out too, right? What did she say? Let's see if I can find her yesterday. Yeah, she like reinforced her whole entire diatribe of doom and gloom. Can't find it in front of me right now. And then even this morning, I'll read this to you. B of A. Last week, clients were net sellers of U.S. equities for the third consecutive week, with rolling four-week average outflows the largest since just before the 2024 election. Just like in the prior 2 weeks, clients sold single stocks but bought ETFs. Selling was driven by institutional clients who have sold in 9 out of the last 10 weeks. That's fucking false, too. Private clients were the largest buyers and have been buyers in 29 of the last 31 weeks, while hedge funds were buyers for the first time in 4 weeks. That's the key. Asset managers, they're fucking getting long right now. And they're like buyers, like big time buyers. I put that in a brief last night showing the asset managers, they're loading the fuck up right now. The cumulative gap between institutional selling and retail buying in the year to date is the largest of any comparable year to date period in our data history since 2008. The big one. And the second largest after 2017, when normalized by market cap. Corporate client buybacks accelerated, but were below typical seasonal levels for the second straight week. So it's just like it's like the bear thesis is just constant go, 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 go. So I would say the biggest question from now until tomorrow is, what's the plan? It's what time is it right now? It's 2 o'clock, 2:30. We got 3 o'clock over there. And the bigger question is, where do we wind up the day?
Trump on Truth Social talking about his deal with the Republic of Indonesia.
The bigger question is, where do we wind up the close? Do we wind up on a low? Do you chase that close for the limit down overnight?
In American agriculture.
Bears are out there going, fuck yes.
Boeing jets, many of them 777s. And for the first time, our ranchers, farmers, and fishermen will have complete and total access to the Indonesian market of over 280 million people.
We have another 4 trigger cluster coming up. The half hour and hour trigger are turning up right now. Can we super ramp and squeeze this close is the bigger question. And then another question would be, where do we go from here?
Hello, everybody. This is Donald J. Trump. Yeah.
I just posted inside the Discord where I think we go from here. On here. Move this over here. Now, even though I think what I just wrote that to you inside the Discord, the thing about this trade is that the thing about this trade that is concerning is the only other thing that I wrote in there. By the way, this is right about there. We're gonna know. This is that same area, that big yellow line. This is where the bulls started this morning. So this is where they got fucking rejected right here. Just so you can see it. Bulls are above here. They want to get up here so bad. So bad. Right in here. Doesn't mean you can't pass there. It just means that this is the seller you shall not pass. This is squeezy up here. Looks like a nice big fat red bar up there too. Do you see it right there? So it looks like we are going higher here. That's my big question here is, and another note too on this, like historical sense to spy. We oftentimes will see a recovery, but no new all-time high. And we had an all-time high in post-market yesterday, and then today inside of, see it right here? I don't know if it showed it up here, but this show yesterday's or no? This doesn't show the overnight high up here, but I want you to pay attention to this right here. In the view of the market seller, this is the top for now into end of month. So that's their top right there. That's 627.80. 627 on SPY at 627.97. So we'll just mark that right now. Show you where we all are. This is what they're claiming is top in the end of month right here. 620.97. 627.97 they're claiming is top. Now, even if we trade up there at 627, I mean, you do 627, 630 or something like that, it's another liquidity grab to sell it again. So that's where the sellers are. They're teeing off from up there. And they're teeing off up there for end of month, first week of August. Guaranteed. And you can see that they've already tried, right? They tried to sell July 3rd. They tried to sell July 10th. And they're trying to sell today. July 3rd, July 10th, and today. And it's all within like July 3rd high was 626.26. July 10th high was 626.98. And the high was in pre-market. It was 627.99. So they're taking whacks at it. Like from the flip side, looking at it from the bull's perspective, we are wearing out sellers at 6,300 on SPX. But the one problem that we have here, the only problem that I see here for the breakout above is that people are now reining in their they're not rolling higher any longer. They're done buying. Then you need more buying. You need like 64s, rolling to 64, rolling to 65, like massive rolling to those upper numbers. Otherwise, what happens is, you don't hit that 6,300. Invariably, we already hit it. But we've already hit it. So maybe you hit it one more time at the end of the month or something, right? First week of August, something like that, and fail it again. And that's your next leg down for rest of summer. I don't think that happens, but I think it's more along the lines of, sell it down at the end of the month, take a couple whacks at it, couple more whacks at it, like one or two more whacks at it, sell it down at the end of the month, and then we stay in trend and run it up again, believe it or not. Let's take a look at this together. Hold on here. Give me one quick second. I'm going to check something in the background. Hold on here. All right, we're going to check something here in the background. We're going to check stock market days, number of sessions. Move that back. Move that over. There. Just want to check something really quick here. See if I'm missing anything. Hang tight here. Check here. Four hours looking good right now. Oh, sorry about my thing being on. Oopsie. Sorry about that. tighter, guys. If your thesis is we're never coming back here, disregard. On air. Where am I at right now? Slide that over there. I'll just keep working it until we get there. I don't know why that line is there. I got a lot of wonky shit going on today. Got a lot of stuff that's like, I don't know what it's doing. Been like charting issues with Weeble. Charging issues with TV. Your thesis is that you never see 500s again. You know what? I was thinking about that recently. I was thinking. I was thinking about. Tell me if I sound crazy here. This is. You want to hear some? You want to hear some trader? Some trader like tea leaf shit. I was like, this is insano. You want to hear some trader tea leaf shit? All I could think to myself was, hear me out here. So I was thinking to myself, I'm like, okay, if we trade whoever so heel tone, this is directed at you. So I thought to myself, I was like, okay, I gotta think farther out in time, right? So I'm like, I gotta think farther out in time. So I go, all right, so let's say we trade 720. Let's say we do a blow off top. I was like, okay, blow off top. And then I'm like thinking about the dollar. And I'm thinking about the value of the dollar. And I'm thinking about people. I'm thinking about like your Davy day trader and their idea of money. And I was thinking about like, so if you go like 720, or let's say you continue on permanent bull market. Let's go like permanent bull market, and let's say we have a major correction in 26 or 27, but it's nothing of consequence. The thing that I was trying to wrap my head around was, if you're not breaking below 500 forever, and you're like now trading $1,000 on S&P 500, like what would people do trading like $1,000 S&P 500? You know, like a 1% down day on $1,000. That's like $10 fucking move, right? Start seeing like 100-point fucking drops, $50 drops. And that was my thought process was like, could a trader wrap their head around that trade? We're going down $30 tomorrow, bro. Just a normal day in the market. We're up another 50 today. That's sideways, right? We're down 20, but we're up 70. We're down 80 now. No, we're up 120. Now we're up 200 today. I know that doesn't really make much of a difference to the options markets, but the underlying it does, right? The underlying, it's like fucking moving. You know? I was wondering about that. And of course, like you get into like 2008, 2001, you know, fucking market it didn't go to zero, but you know, it fucking bled right off. I guess it's the greater idea of like wrapping your head around this S&P 500 $1,000. Oh, you mean nat gas? I did a lot of trading of nat gas. I did the DGAS and was it DGAS and DGAS or something? I forget. But those are fun times, by the way. I was just thinking of wrapping your head around it. It gave me more like what I took away from it was like I'd rather just buy the S&P 500 and not options. Like in and out for 20, 40, 50, $100, 3, 4, 5, 6 times a week's pretty cool. It's like, I don't know. It almost makes like options not as fun anymore. Or does it also correlate to the value of the dollar being in the dumpster? you know, in like 5 years or something. Like if you think the dollar is worthless now, you wait till you see it in 5 or 10 years. You know, which is of course deficit and debt and spend. Create money out of thin air. Trump saying, I'm going to rehash some of this stuff from earlier. Indonesian tariff rate will be 19%, and the U.S. will have access to Indonesian markets. I wouldn't believe that. I would just point blank say that Indonesia is probably going to come out and say, we don't know where the fuck you came up with that. So you got to figure like Indonesia probably hasn't responded yet. That's a one-sided trade deal. It also says India trade deal could be similar, but I'm sure India hasn't agreed to that either. As a matter of fact, I bet Indonesia hasn't fucking agreed to anything either. He doesn't want Ukraine President Zelensky to target Moscow with new missiles that the U.S. is providing. Yep, so that's public now. That was public like 2-3 days ago, but it's now hitting the stock market wire. But that is true. What else we got here? If there's anything else of consequence? I don't see anything else being said here. Jesus, Fort Worth is first city to mine Bitcoin. I got a funny story about, or not a funny story, but I used to know a guy who was an engineer for a TV station, and he mined Bitcoin back in, I don't know, late aughts, 2008 to 10 or something, maybe into like the mid 2000s. And I'm reading this story. It says Fort Worth becomes first U.S. city to mine Bitcoin, deploying 3 rigs at City Hall to run 24/7 over 6 months. Fuck. Bitcoin crashes. And this reminds me of like the savings and loan shit. I sound like a fucking old man. Yeah, like this reminds me of the SNL scam. What's hilarious is that Wikipedia calls it the crisis. It's the SNL crisis. And I'm like, you mean scam? And weren't there like a bunch of like fucking I'm old now, but I was young at that time. I was baby. Wasn't there like a deregulation, commercial lending? Weren't there like a bunch of fucking retirement funds and pensions wrapped up in this shit? Wasn't like Chicago in the middle of this fucking thing? Yeah, fraud. Of course there was fucking fraud. Junk bonds, thrift directors. I remember all this shit. It's all coming back to me now. I was a kid though, but I was into this shit when I was a kid. Fuck. Losses reported by thrifts through 1985 are mostly deferred due to lax accounting rules. Oh my god. It's shocker. The recession caused a sharp regional recession in the southwestern U.S. and Texas. Caused by a drop in oil prices, caused a fall in the value of commercial real estate in those areas. Thrifts in those states, highly exposed to local commercial real estate prices, through their heavy aggressive lending activities, quickly became insolvent. Pressure compounded on banks due to follow-on real estate effects and agricultural recession in the Great Plains. Jesus Christ. I swore it affected a bunch of I'll have to read up on this again. I haven't read this in a long time. What's up Fort Worth reminds me of? Like you get a halving on Bitcoin and fucking craters and you start sounding like a Bitcoin bro. We're not in it. We're not in it for the short term, bro. We're Fort Worth. We're gonna keep mining for the next 2 decades. I want to pull my money out for retirement, bro. Or you got, I don't know. We'll see right here. They're trying to sell this down into the close. See if they catch that 20 move down there. You can see the bars right there. See them up there. There. So here's a good point here too. Fed's Collins saying tariffs to boost inflation over the second half of 2025. Core inflation around 3% by year end. We got to talk about this in this commentary from Collins. He's like dooming it up. He's like, strong business and household balance sheets may blunt tariff pain. Tariffs will slow hiring, but not necessarily by a large amount. Let's look at that really quick. This is bullshit too. Collins Hold on a second. I gotta post this on FinTwit. I just posted on Twitter that Collins is out of his fucking mind. He's short the market. There's a reason for that. Let's go into some of this tariff stuff for the rest of today. You guys got my expectations, preliminary expectations. Let's go into some of this tariff shit because there's so much bullshit here. It's fucking not even funny. Let me bring something up here for a minute. God damn it, I gotta break out a new chart. Fucking these fucking guys, they never fucking stop. They fucking never stop. I'm gonna label this one "never stop." Like never fucking ending like bullshit. It's so fucking annoying. It's like, hold on here. We'll look at this together. Hold on here. We'll do this together so you can do it at home. All right, so we're gonna look at this is just SPY. Nice and easy. Bring yourself up a chart of SPY. I'm gonna show you something, and this is per what Collins is saying. Now remember, we got like no tariffs, no tariffs, no deal. We know that some of the beep are not even collecting, or they're eating. I want you to remember this. Producers, listen to me close. We got PPI tomorrow, right? Producers are eating tariffs. Listen to me closely. Producers are eating tariffs. Corporations are either eating tariffs or they're not telling you that they're paying less. So there's corporate greed, right? Two different groups of people, right? Now, that doesn't mean they're always going to eat them. It doesn't mean they don't attempt to not eat them, all that kind of stuff. But what I want to show you is this tariff thing. And it's going to increase inflation. So what we're going to look at is we're going to look at the inflation rate year over year. We'll do new pane. Make this easy. Here we go. We're gonna look at a daily chart. Here we go. Easy peasy, right? So in 2018, tariffs started with the implementation of and the announcement of tariffs on solar panels, wash machines, etc. On January 22nd of 2018. Listen to this closely here, okay? January 22nd of 2018. This is one of those open your fucking eyes things. Now remember, too, we have a little bit of a difference here. I want you to remember that we have a little bit of a difference here. And I want to show you this in particular. This is the announcement of tariffs. Right here. And inflation went up. You know, inflation went up, but it didn't go up terribly, did it? You got to remember that we were in like a deflationary period down here. Okay, so we were, below. I think inflation was like below 2 or 3% here. But even that inflation went down. Why? Tell me why. And all of our experience is COVID inflation, right? Our recent memory is COVID inflation. This inflation here, like small uptick. Now we're not at or below, we're not a deflationary zone. But what happened in the market? And this is when he first announced them. And look at this. We traded all the way up into October 3rd. We actually squeezed into October. We had a normal correction, end of the year correction, right? Doesn't matter if it comes earlier, later, whatever. We sold into December 28th. And then we just kept going up and grinding. If you remember that time period, it was, hey, we're going into a recession. Remember that talk, recession talk? And we ground all the way up into 2019. Kind of a blow off top, isn't it? And yet inflation's coming down, inflation's coming down, inflation's coming down. So it didn't go up. It went up a little bit, but it wasn't huge. And the market went up with it. So you got Collins saying, oh, fuck, we're all doomed. Now, there is some argument you could say it's not the same today. But where is inflation today? Look at where it is in relevance. It's in the same fucking spot. It's in the literal fucking same spot. And not only that, you got that bump right there. That started back in May when actual first tariffs were implemented. Liberation Week. And this is where, like, the argument comes from JPM saying, Trump feels like he can be more bold. I mean, if you look at it here, the rate of inflation got a little bit more to go, doesn't he? He can do some more here. Rate of inflation going up, market go boom. Normal correction. Later on, look at Trump presidency. Fuck yeah, baby. Thank you. Great market, greatest market ever. Couldn't do anything about COVID. Sorry. Oh, and I ran it up again on you. And let's not forget where real inflation went crazy. Like, when did real inflation go fucking bananas? April of 2021. Do you remember who became president in January of 2021? Do you remember? You probably don't, do you? It was already starting. Right here, baby. Burr, burr, burr. New president. Here, I'll leave this mess for you to fix, right? Inflation way down here. Keep on printing, baby. We'll print our way out of this. Oof. So you got Collins coming out and saying, we're all fucked. Collins coming out and saying, we're all totally fucked here. and we're fucking doomed, and we're going to have mass unemployment, and we're going to have mass inflation, and Q3 and Q4 of 2025 is doomed. You look back there, and it was manageable. And to boot, that inflation was not persistent, was it? Now, if you go back and look at that time frame of the announcement, February 22nd, 2018, inflation peaked in July. So about 3 months. In about 3 months, it peaked and went over. So when you hear like Jerome Powell say, well, we just want to watch and make sure it doesn't go crazy, he has a point, right? Inflation did go up. It didn't go up to unmanageable levels, but it did, you know, when you scale out a little bit, it did continue to go up. So we don't have trade deals in stone yet, do we? So if we get trade deals in stone, you'd want to probably watch inflation based on historical example for about how long? 3 months. So if you have in stone, you could posit something here. If you have in stone trade deals with the world, a blanket, you'd probably expect a fucking cut 3 months after from Jerome. He'd want to see that it's no longer persistent. He definitely doesn't want to see what happened when Biden became president and inflation fucking roared, right? Spend, 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 deficit, print money, balloon the debt. You kind of want to sit there. I mean, if I was the Fed chair, I'd be like, fuck you, man. I ain't doing none of that shit. Wrap up your fucking tariff bullshit, and we'll talk about cuts. That's fairly easy to see, right? It's not like we're not complicating things. Keeping it fairly simple here. Inflation rate go up. Historically not persistent. Historically not what fucking people tell you. Oh, yeah, go on back down over there. Oh, fuck yeah. It's almost like somebody's shortening watching this show. So, like, you don't have, it's, like, people forget these things. You know what I mean? Like, they're like, oh, no, Trump created all the inflation. And do you remember when Trump did that in 2018? It was fucking terrible. Everybody lost their job. Inflation went fucking moon. Now, I do agree that there's a lot of bullshit surrounding this tariff deal and pushing it off and pushing it off and pushing it off. But even JPM's argument today, Trump could become more emboldened with trade war or escalation. That's possible. But for where we are right now, yeah, look where inflation is right now. I don't know that that's where we should be looking. I do think you should be looking at companies that import traditionally from other countries that may be affected, you know, where they can't sneak into other ports, where they can't hide their shit on a fucking, they can't hide iPhones on a fucking 747. You know, they got to buy like tons and tons and tons of grain or tons and tons and tons of this or that or whatever. You know, they can't put that shit on a plane. So you do have to watch out certain companies. You got to, and even in this ER, you should be watching out for companies that rely upon that stuff. Hey, I can't hide Walmart shoes. You know, I sell 30 million cheap pairs of flip-flops every year. I can't fly all those flip-flops. Maybe they can. Maybe there are suppliers that are doing that at a micro level. But I'm sure there are some companies that don't buy a bunch of goods like Walmart. Like I buy all my grain. I can't fucking fly grain here they got a ship set. If you don't know this, if you ever try to sail into the US, if you're not from the US or if you ever leave the US, and you try to get back into the U.S., it's not an easy country to get into. Any traveler that sails the world or any traveler that drives the world or whatever, they'll tell you, like, coming in the U.S. is expensive. It's like going to Japan. It's like going to New Zealand. It's like going to Australia. It's not an easy place to get into. It's not cheap. And then you're trying to, like, have a sneaky port with a sneaky ship that comes in. It's not easy. It's not as easy as you think it would be. Maybe something small, but like everything for your supplier, as a supplier for the year. So I'd watch out for those companies. But you can kind of see why Jerome doesn't want to cut just yet. He wants that trade deal done, fucking period. And he likely won't get any cuts, especially if inflation were to ramp out of control, or unemployment ramp out of control, or spending ramp out of control. But even this conversation here from Collins, he's like this guy is like, good profit margins may limit tariff pass through. For who? I'm going to make a statement to you. Most of the S&P 500 blue chips do not rely upon those methods for goods. They don't. Most of them are fucking service-based. The Dow is. Mid-cap, small caps have a big percentage. Car companies are fucked to some extent. But generally speaking, no. If they do a decent trade deal with like Finnish steel or whatever, they might, weave in and out of the car accident that's in front. The smoke, the mirrors, the flames going around the racetrack. So, Collins is sitting here saying, tariffs will slow hiring, but not necessarily by a large amount. Strong business and household balance sheet may blunt tariff pain. Absolutely. I agree with that statement from Collins. He knows the consumer is still well off. But the negative things he's saying, like it's time for the Fed to be actively patient with monetary policy. I'm agreeing with that. I disagree, though, with like tariffs to boost inflation over the second half. Boost? I don't know if I'd call it fucking boost. I think that's a little strong for a word. He's saying core inflation 3% by year end. I'd say at best. I'd say that's a good top number. Good profit margins might limit tariff pass-through only on certain companies. Tariffs away for a time in what is now a strong economy? Fuck no. When you look back on 2018, 2019, that economy looked fine. Market went up. Market had major corrections like normal. Core goods inflation showing some signs of tariff impact. I agree with that. Durable goods in particular are fucking rampant right now. There is some danger there on durable goods in particular. But we're still on trend, even though we're coming back into trend right now. Now we like whipsawed up, then whipsawed down. Now we're like whipsawing back up. But all we need is just like for that number to just mellow out. But he says, like, I expect downward pressures on employment and growth. And it like comes off, like off the cuff, it comes off as, fucking doom. We're getting a recession, bro. Collins just said it. There's recession fear for Q2 or Q3, Q4, 2025. I would not say that for a minute. I would say possibly in 2026, maybe 2027. But 2025? Fuck no. That's not on that timeline. You remember, you need 2 or 3 months. We're in fucking July. You would need to literally put together a trade deal, which you probably don't want to put together until a seasonal expected low, either now or December, February. So Trump finally does it. It's got 2-3 months. Inflation rises, maybe a little bit more. Inflation comes down. You get another nice major correction of some sort. But I don't see it just yet. his time frame to, or the aggressiveness of what he's saying, I feel is like, yeah, we're in the coming in traditional weakness, so we'll unload some doom on him. And you hear this all day long. Oh, I hear it all day long. I see it in like, I see it on Reddit a lot. And I'm like, who the fuck is speaking here? Is this like Walmart chairman? Is this like the Walmart CEO speaking? Is this China speaking? Who is it? Who the fuck is speaking right now? And you got everybody parroting that same bullshit. At least for right now. There could be damage done we don't see, but the two majors that you're looking for, it's employment. Well, there's like deficit, debt, GDP to some extent. There's some other minor outliers, but you know, unemployment and inflation are still in line. There's no velocity in it. They're not going fucking vertical right now. And even if they were to go vertical, you're still waiting for like 3 fucking months for that to matter. And we're only in July. So, wrong timeline, maybe? Yeah, he's been saying that for days now. There's like, I posted a, oh, maybe I did. I don't know if I posted that or not. Yeah, I think I wrote up a piece on firing Jerome yesterday. I don't know if it got posted or not. I've been having trouble posting shit. It like I save it and then go to post it and then it disappears. Or it's there, but it's in like metacode or something. I don't know what the fuck is going on, but that's been a conversation for months and even this past week. An argument to replace, or the question becomes, the question is, if they ask him to step down, if they ask Jerome to step down, would he? I don't think so. And there's another argument that there's major market risk if he were to say yes to stepping down. And there's also an investigation going on with the building of the rehab of the fucking Fed building or some shit like that. He's like, I got the fucking Fed inspector at every step of the way. I don't think you see Jerome leave willingly. I really don't. In no fucking way, shape, or form would he willingly go. I think it's all banter and it's like all like optics and stop talking about Epstein, stop talking about this, stop talking about the auto pen, stop talking about, like, there's a ton of shit right now. Flip-flopping, taco, you name it. Stop talking about the fucking spending in the fucking bill. Stop talking about raising the debt ceiling. Stop talking about stopping spending, deficit spending. There's like a whole fucking laundry list of shit. You know, and then you're pissing people off with how you're removing people from the U.S. That's true too, right? You don't see him going into gang neighborhoods, do you? Do you see ICE in gang neighborhoods? I don't see him in gang neighborhoods. You see him going after drug dealers? I see him going after some fucking kid who's a security guard, a veteran, and a U.S. citizen in a farm. Can't you remove them more easily? I haven't even looked yet to see the rate of removal of people from him to, like, Gore did a big one for Clinton, and then Obama did a big one. Like, are they even surpassing those rates yet? And they did it quietly. So, like, there's a lot of, like, shit out there for Trump. So it's like I got to get the focus off of all of that, and, you know, I want to placate my base and make it look like I'm doing, like, there's some, you know, that some of this is optics, right? Like, I got to show them that I'm actually removing people. And I need good optics for this. And if the optics turn bad ever, you got to take the focus off, right? I got to take the focus off Epstein. I got to take the focus off this and that. Now start talking about this over here. You know, stop talking about this, start talking about that. But, you know, the stuff about Trump with, like, Trump and, you know, Trump, the Fed, Trump this, that's probably politics and not stock market. Do I think that they can remove him? No. If they did, would it bring volatility? Sure. If they brought up the discussion of it, we're heading into the season of volatility. Sure. Does it result in him leaving? Fuck no. Fuck no. That fucking room is full of like Jamie Dimons. Like it's like full of all the financiers in that room. They're probably in there going, all right, let him try. And then they don't even think that. They're like, he's going to bring this up, take the focus off of what is a thorn in his side right now for politics and optics. Put the focus on Jerome. And, it's, what is it? Bread and water, right? Bread and circus, bread and water. And you can like say, look, I tried. I did everything I said I was going to do, but it's not my problem. I think, didn't he say that this week? Trump said something about Ukraine and Russia. And he snapped back and said, look, it wasn't my war. It's not getting done that quick. 50 days isn't enough. Need more time. And what did he say? I'd have that done in 3 days. I would have had that done in 1 weekend. And he's changed the narrative again. I think that's fine. I have no problem with politicians doing that shit. But remember what you're listening to and what the intent of it is. Will they remove Trump or Powell? Probably not. Will they bring out the bread and fucking circus for it in the time of volatility? You bet your ass they will. Are you going to assign the down move to that? Probably not. We're in the season of volatility. We already know that we're going to make some down moves here. It's kind of a known fucking thing, whether it's now or into October, November, September, October, November. And you already got people wanting to set up that trade for next year. You got bulls that are like, give me a pullback, baby. I want to get long for fucking December, February. So you get all these different competing things and what, why, how, and when. Does he get Powell removed? Fuck no. That semi-private bank is not going anywhere. That's theirs. And politicians just live in it. Yeah, get us down inside the hole over here. Run us right down into the hole. Dixie's still cranking. Vic's looking bullish. Maybe a little bit of pullback. Might get a quick squeeze in here. And then a roll down. VIX 9-day looks like it wants to drop a little bit, but it might not turn into too big of an upside for SPY. JPM still eyeballing that bad boy over there. I want to put a fucking trade on this right now. I don't want to wait, though. I got to be patient. HYG just getting annihilated. Ten-year moving on up. I do find it ironic how people get roped into. Oh, I'm talking in the Discord right now. Oh, that looks like a triple top too, doesn't it? Or a double top. Well, hold on a second here. I gotta do a shit post here. Hold on a second here. Can we get it in the close, maybe? I mean, I'd really like to see it even stop even higher. There's that one right there. There's this one right there. I don't even know if I can get any down any farther. Oh, come on, shank this bad boy. Shank this clothes. Sorry. I'm like laughing at this fucking memes fucking inside the fucking Discord. Yeah, like, well, yeah, dude, like, I didn't read this yet, but Vol, I didn't read this yet. Yeah, this is okay. So I haven't read this article yet, but I'm going to tell you what this means because I'm actually pretty fluent in this shit now. So like this is an article from today. I'm assuming I have not read it yet. We can read it though. Before we even read it, I'll tell you what it means. So the Fed's nightmare: CPI inflation in services reheats. That's not tariffed. We talked about this in the show today. Earlier today, I said to you, you can't control services inflation at all. And services inflation is completely different than tariff durable goods inflation. So and we talk about that, like services are a fucking wildcat. So it says the services reheats. That's to be expected. And while inflation in durable goods, which is the tariff stuff, right, remains cool. This also backs up the argument of Jerome Powell that's willing to fucking raise rates, believe it or not. Now, while pundits looked with their magnifying glasses for tariffs and consumer goods prices, it was in services, which are not tariffed, where inflation took off again. Shocker. No. It's not a fucking shocker. You can feel it everywhere, right? If you go out there, right now and you are spending money, I know I'm spending money, and everywhere that I spend money, it's fucking glaring. And not only is services inflation, like, it's weird, like services inflation doesn't just include, like, I don't know, go to a grocery store or an online sub. It includes like Netflix, Meta, like these big, huge fucking S&P 500 companies. Like they're just like they've been piling in since like the first fucking fart in July of last year. They're like, ooh, Trump might win the election. Tariff 2.0, raise prices. You know, like literally, tariffs, services, and it's insane to see it. And guess who eats those things? You and I. As long as we say yes to it, until we can no longer justify it. And what else is crazy too is like these banks, right? They fall into this too. Their services, they don't buy shit from anywhere. All these different, there's like 10 different kinds of banks, maybe 12. But like financial services, they got murdered in February to like April, May. But then they've paid for it in stock price, but since then have made huge fucking fees. So some of these service fees, right, or service-based businesses got literally hammered due to uncertainty. But they're not anymore. They just like raise prices, and all of a sudden you get like stock market up. Everybody's like, ooh, we got to go get into like Tesla and Nvidia and call my broker up and call my financial advisor, tell them to let it all ride on this and let it all ride on that. And who right now is the biggest participant in the market? Retailers. Retailers are. So when you see like JPM down today, that fucking like JPM was ready to fucking like moon into the end of the year. I got to read that article. Let me go get it right now. I fucking love Wolf Richter. This guy's got this shit on lockdown. He's got it on fucking lockdown. He's probably the only goddamn truth teller out there. I'm going to read this to you right now. I'm going to send you to this guy as well. His name is Wolf Richter. He's from Wolf Street. He's got a couple books out there. Very intelligent guy. You'd be shocked at who actually follows this guy. He's probably the straightest fucking shooter you'll ever meet when it comes to economic data, its impact, etc. As a matter of fact, what I would recommend for you to do is do a Google search. Do a Google search of Wolf Street. And I think you can just do inflation. I'm not sure. It's inflation or CPI. Right here. Oh, I got it right here. Hold on. Nope, wrong one. Yeah, right here. If you don't believe the things that I say to you in this show, let me go inside the Discord. If you don't believe the things that I say to you in this show about inflation, and here's the pimp slap right there. Read that stuff right there. That's a whole category on inflation and devaluation. And when you read that stuff, I want you to read the comment sections in all of these old posts. And you can literally go through and look at inflation going all the way the fuck back into, mid 2000s. Mid 2000s, you can go back and read a whole bunch of shit. Now, I'm going to read you his most recent article. This was today. I'm going to read it to you guys here because this shit's cool as fuck. The Fed's nightmare. And this is why Jerome, this is another reason why Jerome cannot fucking cut. Not only that, I know you don't want to hear this, but he's at more risk of raising rates, believe it or not. If you've got non-sticky tariff inflation, but other inflation is just going higher and higher and higher, he's got to step in and fucking throw the hammer down on people, right? On greed. Because greed affects you and it affects me, doesn't it? We feel that squeeze. While pundits looked with their magnifying glasses for tariffs and consumer prices, it was in services, which are not tariffed, where inflation took off again. Shocker. No. The shocker was the acceleration of inflation in services. Services are not tariffed. They include housing costs, medical care, health insurance, auto insurance, subscriptions, telephone, internet, wireless services, lodging, rental cars, education, movies, concerts, sports events. You know, sport event? I just fucking went to a Cubs game. The ticket was $20 or $30. The fucking service fee was another $20 or $30. Not the ticket. The service fee per ticket. Club memberships, public transportation, water, sewer, trash collection. These are all your taxes. These are your county, city, state. These fucking people, they all want to get theirs. I've told you this before. I think I said this yesterday to you. I said to you, all past fucking 2-3 years, I've told you, the consumer is well off. The consumer is more well off than they were into 2019. I told you the stories about Mary the Landscaper, Bob on Main Street. I told you that the fucking zeitgeist was lying to you. We got free fucking money, and Mary the Landscaper did not buy a Bentley, did not go to Vegas. She literally, like, started a business. She started a landscaping company. She had a landscaping company that was going to go bankrupt. She had a restaurant. She had whatever the fuck it was. She got all new equipment. She got all new this, all new that. She had student loans. Even right now, when you hear people say that they have student loans, they're in debt, they're fucked. Don't fucking believe that. They had the opportunity to pay that shit off. Some people renovated their homes. Some people have homes that are worth what? $1 million fucking now. Well, we redid this, we redid that. The house has gone up fucking bazillions. We put it on the market. You know, there's nothing on the market. I made a bunch of money. That's another thing about a housing crisis. There is no fucking housing crisis. Not for the vast majority. Those people are well off. Consumer is well off. So what do you see? You see everybody getting in on it, right? You see durable goods everywhere going up. You see other companies following suit. And then what do you have? You're stuck with inflation everywhere, right? So you get pinched, I get pinched, they get pinched, Mary gets pinched, Bob gets pinched. And then you've got politicians that are harping on this. It's Biden inflation. It's not my inflation, it's Biden inflation. I hate inflation. You hate inflation? And even if you're making more money and your wages are going up, and even if you're better off as a consumer, you hate it. And not only do you hate it, you don't want to fucking pay it. And you don't want anybody fucking knowing that you're making more money either. I don't want to pay $20 for a fucking burger. What about the extra 50 grand you're making a year? I don't want to talk about that. This is America. But meanwhile, city governments, county governments, services companies, everybody out there knows that you're well off. Your president knows that you're well off. Everybody fucking knows. So somebody has to get that fucking money first, right? It's either going to be Trump. It's either going to be Congress. It's either going to be the city, county. I got a tax fucking bill that said we're taxing all of your properties for property improvements. Every fucking house in the county. You know why? They had a city fucking council meetings going on, and they would wait for a house to pop up for sale, and they'd say, this fucking house hasn't pulled permits since 1972. And they would literally pull up the Zillow page. These people are that fucking dumb. And they'd be like, look at all these fucking pimp photos of this house. They didn't pull a single fucking permit. Hit that asshole. And they got tired of doing that and said, fuck it. Looks like everybody's doing this. Everybody's renovating. Everybody's putting in a new kitchen during COVID. We need to get ours. So there's always, you know, smarter people that know you're well off. There are politicians that want to push through what they want to push through. There are governments, right? Like bureaucracy that want your money. There are companies that want your money. So, sports events, club memberships, public transportation, water, sewer, trash collection. 3:37 right now. We have 20 minutes left, 23 minutes. Motor vehicle maintenance and repair, etc. And that's where inflation reaccelerated. I went looking for an auto job the other day. It ran the gambit from like $6,000 to $10,000 to like $3,500. I was like, you got to be shitting me. And that's where inflation reaccelerated. While the pundits out there were busy searching with their magnifying glasses for signs that tariffs are getting pushed into consumer prices, I say rightfully so. It was in services, especially non-housing core services, where inflation took off again. Inflation in durable goods, including new vehicles, apparel, and footwear, which catch a substantial part of the tariffs, barely budged, with new vehicle prices dropping. What does that mean? What does that mean? That means that either the producers are eating those costs or the companies are. You aren't. So you're not getting tariffs passed on to you. Who's eating it? So in this ER season, you want to pay close attention to two things. What? PPI, and which is when? Tomorrow. And you want to look into what else? Companies that rely upon like big shipments of all input to their goods. So you see Dow Jones down today in the morning, right? Start looking around at the mid caps, the small caps, and the big caps, and they can't avoid that stuff. Either the company is eating those profits or profit losses, or these other countries are. It's one or the other. We don't know that information yet. That's to be known. It takes time, probably 3 months. So inflation in durable goods, including new vehicles, apparel, and footwear, which catch a substantial part of tariffs, barely budged, with new vehicle prices dropping as automakers ate all of the tariffs because they could not pass them on, because demand in June was already weak, and what was needed was incentives that translate into price cuts. And we already knew that from their earnings warnings. Now, that does not apply to used cars. But the reacceleration of inflation in services, especially non-housing services, was just one more nasty surprise that inflation tends to dish up. Core services without housing jumped by 0.38 or 38% in June from May, annualized. The worst increase since January, but we already knew that. None of these services are terrified. Terrified. The 6-month average accelerated to 4.2%. So that's a worrisome development. What's the key word there? Accelerated. That's velocity. Core services with housing also accelerated. They're the biggest component of CPI. Remember, CPI is like a snapshot. PCE is like all the other shit that you consume. But core services with housing also accelerated. They're the biggest component of CPI, accounting for nearly 2/3 of overall CPI. They rose by 0.25% in June from May. Housing costs also accelerated in June from May. More in a moment. The 6-month core services CPI rose by 3.2%, the same as in May. I literally just spent a week during my fucking vacation that I didn't fucking get, wanting to hire people to do a job for me, and I couldn't. Or not that I couldn't, I wouldn't. I refused to pay what I was asked to pay to get this work done. I was like, no fucking way. I am not fucking paying $15,000 to $20,000 to do this job. I'm like, you're out of your fucking mind. You're straight out of your fucking mind if you think I'm spending that money. And this is like easy shit. Running Cat 6, right? Through walls, running 20 amp circuits, installing outlets, putting a wall up, insulation, sound insulation, finishing a wall. I did it all by myself. I had a couple helpers, but I banged that shit out like it was nobody's business because this shit is hurting. The 6-month core services CPI rose by 3.2%, the same as May. Durable goods prices barely budged, inching up 0.09%. In June from May and year over year, we're up just 0.6%. Durable goods CPI spiked by 25% during the free money era. Remember that. Durable goods CPI had spiked by 25% during the free money era. You know when that was, right? During COVID. Then in mid-2022, prices declined for 2 years. And we're not in the free money era right now, are we? So there's no free money fueling this. We don't have that same situation right now. We have a little bit of money coming into the markets and stuff, or into the economy, but nowhere fucking near. And that means that points towards greed. I got to get mine, bro. The durable goods CPI had spiked by 25% during the free money era. Then in mid-2022, prices declined for 2 years. Negative CPI, but from September 2024, prices inched up again through January, and since then have been roughly flat. I got a better chart to show this durable goods shit. I'll show you that. This chart shows the price index, not the percentage change. It clarifies just how violently prices spiked during the free money era, how they declined for 2 years, and how they've inched higher from that low point just last fall. Apparel and footwear are also terrified if imported. We're almost there. And much of it is imported. The CPI for apparel and footwear rose by 0.4% month to month, undoing the equal drop in May, with no price change over the 2-month period. Year over year, CPI for apparel and footwear declined by 0.5%. Someone's eating the fucking flip-flops from Walmart. The chart shows the price level. So when you go to Walmart and you see your fucking flip-flops are double, they're fucking you. Or they're eating the profits. It's one or the other. Or the supplier is selling them cheap. That was our discussion earlier about Temu. Someone's eating them. So far, companies have eaten the tariffs because prices are already high from 2020 to 2022. Burst of inflation when consumers were willing to pay whatever. And companies made record huge profits. For now, consumers are not willing to pay whatever again. Raise prices and they will not come. Dude, look at McDonald's. I fucking got stuck going to that fucking place again recently. I drove off. I said, fuck this. It was like a fucking $60 or $80 meal. I was like, you're out of your fucking minds. Fuck you, no. And they made me wait. I was like, I'm out of here. I can't do this. I'll just won't eat. I'll just fucking starve. Fuck off. So far, companies have eaten the tariff. That was one fucking meal. $60 goddamn dollars. How do you get by on that? So far, companies have eaten the tariffs because prices are already high from 22. The burst of inflation when consumers are willing to pay whatever. The companies made record huge profits. For now, consumers are not willing to pay whatever again. Raise prices and they will not come. The overall CPI rose by 0.29%, annualized in June from May. A sharp acceleration and the biggest month-to-month increase since January. Blue in the chart, driven by services and energy, natural gas, electricity, and gasoline. So tell me you don't feel this. I feel it. I feel it in everything I do. I can feel it everywhere. I feel inflation around me. It's in the room with me. The 3-month CPI jumped by 2.4% annualized, the highest since March. The 6-month CPI rose 2.5 annualized, a deceleration of the prior month's red in chart. You guys can look at the charts yourself. Core CPI, which excludes food and energy components to track underlying inflation, accelerated to 0.23% in June. The 6-month core CPI rose by 2.7% annualized, a slight acceleration since from May. Major components of CPI year-over-year price changes. Overall, 2.7% yellow, a sharp acceleration from May. Second largest acceleration in a row. And the biggest increase since February, despite a year-over-year drop. Housing components of core services, owner equivalent of rent CPI, accelerated to 0.30%, 3.7% annualized in June from May. The 3-month average decelerated to 3.8% annualized, still a faster play pace than late last year. OER indirectly reflects the expenses of home ownership. homeowners insurance, HOA fees, property taxes, and maintenance. It's the only measure for those expenses in the CPI. It is based on what a large group of homeowners estimates their home would rent for, with the assumption that a homeowner would want to recoup their cost increases by raising the rent. As a stand-in for homeowners' expenses, OER accounts for 26.2% of overall CPI and estimates inflation of shelter as a service for homeowners. Rent of a primary residence CPI accelerated here to 0.23% annualized. Rents are no longer the driver of services inflation. The drivers are now in other services summarized by the core services CPI without housing in the first chart above. Rent CPI accounts for 7.5% of overall CPI. It is based on rents that tenants actually pay, not on asking rents of advertised vacant units for rent. The survey follows the same large group of rental houses and apartments all over time and tracks the rent or rents that the current tenants who come and go pay in rent for these units. Year over year, OER rose 4.2%, increase as in May, and still substantially higher than before the pandemic. Red in the chart below. Rent CPI rose by 3.8%, is now back in the same range as before the pandemic, 2019. The historical unusual situation of the OER running hotter than rent CPI may be due to the surging costs of homeowners insurance, which homeowners may be taking into consideration when estimating how much their home would rent for. God damn. All right, that's all I can read. This thing is long as fuck. It's too fucking long. He's got the whole breakdown. I would recommend that you also read up on prior durable goods articles from Wolf Richter. Do a Google search, Wolf Street durable goods, and wait till you see those fucking charts. I mean, they did come up. If there was like a durable, I mean, he's telling the truth, but not fully. Like we had this huge spike in durable goods, then they came down, and they've whipsawed back up in line to this point. But they're leveling off. They are leveling off if you look at the durable goods charts. We're not seeing this. We're seeing this. And it would take months for this to show up anyways. Now, it is dangerous, and he does say this in this article, that your durable goods is not popping yet, but your regular inflation is. If tariff inflation were to combine, you're looking back to the same bullshit scenario. But it's not the same. We don't have the era of free money right now at all. We do not have tariffs. There were no tariffs that time period. It was free money. That's what it was. So free money was the cause of outside of the normal range of tariffs or inflation by tariffs. And we don't have any free money. We get some, but not a ton of it. And you've got what? You got Trump asking for free money, right? Can't do that right now, can you? Can't do that right now. There ain't no cuts coming your way right now. I'd like to see the Fed funds rate today over that. That tells me in 3 months you might be seeing a rate hike. You imagine that right now? A rate hike. Why are you doing a rate hike, sir? We got to quell demand right now. Inflation's fucking raging. Is it from tariffs? No. They're eating the dogs. I know. I saw that one too. Okay, so you see what I've got going on. You've got access to the preliminary expectations tomorrow. You know exactly where I think we're going between now and tomorrow. I'm betting here. I'm gonna make a bet here. Hold on here. gonna post this in the Discord. You got to watch Asian markets and Euro markets. Make sure they're not trying to fucking scoop it up. I'm going to make a bet here. If you're an only cash market trader, this is up tomorrow. You wake up, this is flatter up tomorrow. But if you're trying to min-max, you're probably waiting until tomorrow morning. If you're cash only, this guy's a fucking genius, man. He's so goddamn good. I was gonna write a post, but I'm not gonna. I was gonna write a post about him not being able to get his giant fucking balls through the doors of San Francisco restaurants because of how fucking spot on this guy is. Nails it every single time. Here, I did post something. I wrote a nice bookend as reading more about this in his durable goods posts or even his inflation and devaluation compendium. Oh yeah, blood. Shank this thing down into the clothes here. Shank it, shank it, shank it. Oh man, I might have to buy this clothes here. See, this is such a tease to me right now. I'm like, just wait for like 4:14. Some nice little call spreads for Friday. Yeah, me too, Nick. I want to buy some call spreads here on the bell here. And I know tomorrow's expiration. Should not do that. It's such a fucking tease right now. The setup is just too good. You just buy the fuck out of this like 4:14. You get it as deep as you can possibly get it right now. Like right in here, just get it deep, deep. Yeah, get it down there. Get it down there. Go on. No, a little bit more. Little tiny bit more. Get it a little bit more. A little bit more. Give me like 15 minutes of doom. Just like doom, 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 doom. I mean, just a little bit more. Just a little tiny bit more. Wait until 4:14, Nick. With the like literally at 4:14. A little tiny bit more. Just like let it all hang out. Literally 4:14. The only reason I say spreads is because I've done this before, and they will fuck you on just straight like 0 dates for the open tomorrow. 1 dates today to 0 dates tomorrow. I've seen them fuck me between. I don't know what they changed something, and they're like, no, sorry, bro. Between like 4:15 and 6 p.m. we now like fuck you there. Like spreads though, I've never gotten fucked doing this anymore. I used to be able to do it with zero, like would become 0 dates. Now when they do this, always spreads are better. I don't know why that is. The Fed said something about being aware of arbitrage traders coming into aftermarkets, and I notice it a lot in here. Oh God, I want to buy this so fucking bad right now. Hold on here. It's 4:01. What time is it right now? Hold on here. Goddamn, like, watch this fucking. It's like killing these, murder these fucking calls down to nothing. Get them dirt cheap. What are we looking at? 16th is tomorrow. We got 2 days, 3 days, 3 days. Oh, Monday'd be really nice. Oh, man. What are Mondays looking like? 6:30, 60 cents? Woo. Fucking 6:30s for, oh no, that's Friday, the 18th. There's only 60 fucking cents. They're telling you, fuck no. They're telling you we don't give a fuck what PPI is tomorrow. Without a doubt, they're telling you no. Maybe not. Maybe no. Maybe not. Maybe not. Hold on a second here. All right, I'm gonna hold off on buying calls here. The reason I'm holding off is I'm looking at 6:30s for the 18th, and they're fucking 58 cents right now. Like, wait a minute here. Like, we'll do it over the weekend. We're not doing it for you on Friday. Fuck you. 60 cents is, I mean, 50 or it's 50 cents, 57 cents right now. It's such a fucking juicy trade. I mean, it's worth just the loss right here. Now they're 56 cents. You don't have to hold them for the full, whatever. You just hold them for the fucking overnight spike. Get a little bit of fucking OI and the hope that we're going up. We're still bleeding right now. This is good to see. Keep on bleeding that shit. Bleed that fucker down. You guys watching that? Oh, fuck yeah. Fucking right. Get on down there. Just burn them all. 404 right now. Stock market on fire right now. Yeah, Monday is not. Well, what I think is what they're saying is we're not coming back. We're gonna do our Vixpiration thing is what I think they're telling. If the way that I'm reading this is fuck you, we're doing Vixpiration. We don't care about PPI. That's what I'm thinking. Sell the news on PPI regardless. I would be waiting, not in cash market, but I'd be waiting at like 8:30 with futures. You could chase it there, but I wouldn't chase it here particularly. Only because of the option pricing. Someone's wrong. Either dealers are wrong here or you and I are wrong. When it's priced like this, I think that we're wrong, not dealers. For that many days out. 3 days out. I think those 630s earlier today were like $2 or $3, I think. I haven't checked yet, but I think they were up there. They were buku bucks. Yeah, that's even cheap too. Monday 90 cents. That's dirt fucking cheap. That's too cheap. It's like too suspect. Congrats on the 619Ps. Yeah, if you're in any puts, you could close on 414 to get rid of some of that risk, that upside risk. All right, I think we're done here. Pretty close. 4:08 p.m. All right, I'll see you guys tomorrow at 9:30.